Good morning, everybody. And you're still muted, I think.
Yes, I am.
You
Hello,
are.
good morning.
Good morning, Jonathan. You've changed, man.
Yeah? We haven't seen each other for a while.
We haven't seen each other for a while.
It's been a long time, and I believe it's my first live and the first hour of a Monday morning. So welcome everyone for the whole The5ers streams. Yeah, I believe
good morning and welcome to the early birds, man. Yeah. And good morning to everybody else out there. You might have noticed that it's not Jonathan and me today because Jonathan is on a well-deserved vacation. But I have Anastasiia with me here today for the Monday morning session, which of course more than makes up for that. Yeah, welcome to the early birds on a Monday morning, Anastasiia. How are you doing?
Yeah, doing good. Market is going crazy. World as well.
Yeah, it is. The world is. We have World War III ahead of us. We have the markets going crazy. So yeah, good times to be a trader. All right, how's everybody else doing out there? Let me quickly play the intro, and then we can go right into the markets and talk about all the nice things we have for you today, not only on this show, but throughout the whole day. As Anastasiia said, a lot of volatility. We have a nice giveaway this week also. So if you want to find out more about this and how you potentially can win some nice high stakes account, you better stay tuned, at least for the next 15 seconds. Monday macro movers, and I always kind of feel like we're talking more about technical analysis and live trading than about macro. Although normally that should be the time a bit actually to talk about macro, because like Anastasiia already said, the world is going crazy. Let me quickly see who's already with us. I saw already some of our usual suspects there. We have Raj with us. Funding pip sucks. Okay, whatever that means. Morning to all from
live, but you know.
Yeah, that's life. Some things suck, some don't. And yeah, we have, as you can see with a banner down there, a special giveaway this week for every day of the week. Actually, you'll find in the link of this description. In the what is that called? In the description of this video, this is what I wanted to say, a link to a website called Gleam, where you can enter a sweepstake and have a nice chance to win one of our very precious and high in demand high stakes account for the $5ers. So it's free to enter. You can up your chance a little bit if you like certain content. Talking about liking, please make sure also to give us a like here on today's Monday morning session to get us started into the week. And yeah, so nothing to lose, and come back every day to re-enter that competition. And then by Thursday, we are going to, I think, live draw, Jonathan said, all of the winners that participated in this. Sadly, we cannot participate.
And also, more than this, we are almost 75,000 subscribers on our YouTube channel. So make sure to subscribe if you're not yet, and invite your friends, your co-traders, because if we do hit 75,000 subscribers this week, next week, Jonathan is going to do a very special giveaway that you really don't want to miss out on. So make sure to hit the like button, the subscribe button, and invite everyone who can benefit from our live streams.
Yeah. That's crazy, no? Giveaway this week, giveaway next week. I mean, what else could you ask for? Live trading. Man, I wish I could be watching this every day. All right, good. So that's a good comment here. Yeah? No, we are not celebrating that Jonathan is out for the week. That poor guy, he already said he kind of picked the wrong week to be on vacation with everything that is going on in the world. We've seen some, let's say, interesting developments, of course, over the weekend. We have, of course, in focus at the moment more political things than let's say, levels of support and resistance, although this type of volatility, of course, for us day traders also gives a lot of opportunities. Normally in chaos like this, when the markets become a bit inefficient, there are also a lot of opportunities rising. So let's see if we can find some of those levels that are going to be interesting. For me, kind of surprising, actually, especially if I see what's going on futures-wise in the markets today, in the US indices. I have a NASDAQ here on my screen, that we are still holding up quite well. Yeah, I would have actually kind of expected this morning to start a bit more on the lower end. How have you experienced all of this, Anastasiia?
I did expect it to start on the lower end, but on the other hand, we also have several aspects that are cooling off the whole impact on the market, especially also with oil. As you can see, oil opened with a huge gap to the upside, but is now declining. The reason for this is that iron has several ways that it can respond, right? It can attack and return. It can also close off the pathway to deliver oil from the Middle East to Europe and US as well, which they said initially yesterday they are not planning to do. And this was one of the cooling off factors for the markets because if they would really want, they would be able to close it immediately, which would impact obviously not only the oil prices, but also the rest of the market as a snowball effect. Panic also develops. So I think a lot is going to be depending on how they're going to respond to the next couple of days.
Yeah, so. And but I think also what's keeping them a bit from it, that probably could be like the reason that we see like a party like the USA. I mean, technically they have entered the war, of course, now with the bombing of the nuclear facilities in Iran, but also countries like the UK and other that are close to the USA also entering the war. So I think like when it comes to Iran, that seems to be like a thing of last resorts when maybe, they want things to actually escalate.
What do you mean, for people or for the government?
Yeah, it could be like if you close down the strait and cut off other countries in the West from oil deliveries, or make them much more expensive because they have to go the long route around Africa, that could be a potential reason for other Western governments to also enter the war on the side of Israel and the USA, I think.
Yeah, that's for sure. I do expect the oil prices to continue rising, though. So I'm definitely expecting it. Yeah, actually, one of the interesting things I'm looking at right now is that oil came back to the volume of the last week. So we can see this volume accumulation here, and it literally actually rejected the same level I was talking about last week after this gap to the upside. But nonetheless, what is interesting is that we are right now at the point of control of the week, and we are at this high volume node here from the from the 1 hour time frame perspective. Now I'm going to delete all of this to not. So from 1 hour time frame perspective, we are on the point of control of all of this. So at the maximum volume, we have 16 minutes left for the candle to be closed. If in 16 minutes the candle is going to be closed above the level 73.50 for the futures for US oil, I'm going to be entering long for the price to return to the opening gap. So 75-70 levels. And as you can see, this zone was quite an important zone for oil. So I'm expecting at least one more rush to the upside on oil prices today. And it does quite look nice if the price, if it's able to close and hold above the point of control on the volume. So that's going to be my one of the trades most likely for the beginning of the week. But again, I'm waiting for the next 15 minutes to confirm it first.
I told the audience last week actually a couple of times, like, oil is one of the assets I never trade because I always lose on it. It's really my horror asset to trade. But I talked to a friend of mine last week who's a very successful oil trader, and I asked him, like, how about, oil for me has it's a little bit like gold and a little bit like Bitcoin, because you see a lot of spikes to the upside and downside. And he said, like, one thing to me that kind of struck with me, said, like, yeah, but if you have a look at especially the spikes to the upside intraday for oil, they are always very short-lived. So his strategy is very often when he sees the spikes, and I can see on your screen like 3 of those very predominant spikes in the last days, one which just occurred this morning, actually, like you said, that those are really good to kind of have as zones where you have an indication that the market will fade away again, and then you can re-enter the long trade there once the market has normalized a bit, which from what I understood here is kind of what you are looking at the moment also, right?
Well, I'm looking at it. I'm basically trading based on the volumes, because I found out that oil is one of the assets that responds the most to volume areas. I haven't thought about short move to the upside. The reason for this is that I've been trading oil for the past 4 years, and it has different periods. Like, for example, 4 years ago, 3 years ago, it was perfect. It had a perfect structure. It was perfectly reacting, and I had a calculated average stop loss take profit size. Now later, with the Trump coming to the presidency as well last year, oil completely shifted. And it started to consolidate for a long time and then move it aggressively, and then consolidate it for a long time and move it aggressively. But it's quite difficult to find the entry point unless you are risking to get inside of the range and hoping that the price is going to go your direction, or analyzing it based on macro and holding through the periods of the drawdown. So it switched towards more of a intra-week / swing positioning holding for me for oil. Whether it's this actually situation, it's I'm potentially evaluating it as a good intraday trade. But yeah, I do see what you are talking about, like with a movement to the upside and then correction. It's been quite like this for oil for a while.
So sorry, I just had to type something. I saw the comment here that it seems like there's a little problem with the link. If you're already a subscriber of the channel, I forwarded this to the support team, and they are going to look into it. But the link itself worked, so I just checked it out myself. Should work for you, but parallel to this, we have our support team looking into this as well, to make sure everybody who wants to enter the sweepstake, the giveaway, can enter the giveaway. Now, when I hear you talking like this, Anastasiia, like, makes total sense to me. Like, volume profile is like something I not at all have in my belt of tools to analyze the markets. So that's why it's always very interesting for me to hear you talking about this. And you could actually tempt me into trying an oil position. But if I can give you one advice, then you should trade the opposite of what I'm trading. There's a very high chance that you'll end up making money then. Yeah, there's some people also confirming here that the link is working. So okay, that's good. Nonetheless, support team is looking into if there's any issue. Yeah, other than that, we are, of course, have the usual suspects that we like to look on here in our morning session, one of them being gold, which for me, especially the last week, has kind of been a tricky asset to trade. You guys know that I'm using my new trend following system, which I'm automating also at the moment. First, I'm going to automate it for this down here for Bitcoin, which drove me crazy last week because I had like an extended coding session of 3 days. And yeah, I think I would have lost all of my hair if I didn't already lose it before that. But that's a different story. It's a bit choppy for me at the moment, gold. When it moves, it tends to move very fast. But then again, you have like sessions or like extended periods of time, like we had here, for example, that was on Thursday, which lasted really, really long. We're talking here about a really narrow range where we were trading for 8 to 10 hours. And I'm already displaying this on a Renko chart, which takes out a lot of the noise of the market. Yeah, for those of you who don't know Renko chart, it's a chart form that I treasure very much because it takes out the time variance of the market, because every box, in this case, you see here to the upside, the green box is a move of $1 to the upside. Every red box a move to the downside of $1, and the Renko chart doesn't really care about when those price moves occur. So sometimes you can have minutes to hours between the last box and the new box forming, and it tends, of course, to be a bit more slower to show you trends, but it filters out very well all those phases of just where markets go sideways. So if you are trading a trend following system and you're not that much of a contrarian trader, and if you're a beginner, I think going with trend following system is the better way. It's a bit easier, in my opinion, than at least on the mindset and the psyche than trying to be the contrarian, because as a contrarian, you very often end up that you get stopped out, and then the market goes into the direction that you wanted it to, because it's hard to go to gauge like how far is the wick to the upside or downside going until the market turns around. As I said, this is eventually going to end up as a mechanical trading system, as an expert advisor, so to say, for MT5, but still a lot of coding work to do there, because believe it or not, if you want to work with a trailing stop on Renko chart, there's no solution, no ready-made solution out there. Nobody has ever coded that for any crypto bot or any MT4 or MT5 trailing stop. So I have to do it all from scratch, which is a good exercise, but driving me crazy. US, as I said already, it's quite interesting really for me to see that NASDAQ and S&P, of course, at this hour moving very close together still. So quite surprising to see that to the upside. There is still a lot of momentum. We are still very close in both, but I want to look more at the NASDAQ here to our all-time high. So that's the nice thing, no? Should like the situation there in the Middle East maybe calm down a little bit, the chances are higher that we see the breakout, in my opinion at least, onto new all-time highs than the market really breaking down there. The only asset, in my opinion, that really reacted a bit more severe to what was going on with Bitcoin, this is something I drew last week, where I said, looks like we are kind of in a zone of compression, which we actually left to the downside. This target zone here I painted 2 days ago, because it's very often for Bitcoin when we close below the 8 weeks moving average, which is the blue line, that we see a pullback all the way to the bull market support band, so the yellow and the red line here. But it's not always happening, but we almost reached those already. So well, there is a link, as we said now many times already, in the description of this video. And the answers you have to find out yourself. Questions that you need to answer. And they are trading related questions. So if you are a trader, you'll know the answers to those questions. What else are you looking at the moment? I'm kind of reluctant to enter trades this morning, honestly speaking.
I was looking at that short of S&P 500 actually. Right now. Yeah, the short. Okay. Yeah.
Let me add you here again.
Yeah, I'm looking at the short because last week I was taking the short here already. So that was and now we are kind of coming back to the same zone. Now we are approaching the point of control of the week. What is interesting for me right now is that we are in the same zone of the big volume that the price has been testing several times. So we have one of the previous volumes as well of the beginning of the June, so the first week of June, the second week of June, the third one, and now the fourth one. So majority of the volume during the whole June period was trading on those two zones, which I'm expecting that this is the price reaction before the market closure on Friday. So we tested this zone already. Now this is the one that the price hasn't tested before, and after this accumulation. So we had an opening to the downside based on everything that is happening with Iran and US. And right now the price is approaching the previous volumes. We can see that it tested it slightly, and I'm expecting the price to return at least to 6,000 level and perhaps even test the level of the gap where the price has reached in that night, overnight, so 59.70s level. So I'd say I'm more short in approach. I don't have yet the entry confirmed because I do think that we might go a little bit higher. There is also the chance that it's just going to drop without me and I'm going to be too late, but I'm willing to accept that. I would like the price to go around 60.42 level here before shorting it. So
that's a bit to go also still, no? I mean,
yeah, it's a little still. It's still a while, a little bit. So it's, and then the continuation, the reversal back to the downside. But let's see. Maybe if it's going to drop without me, and I'm going to miss the entry completely.
So if I may ask, that you probably have answered this question a lot before already on the live streams. If you look on something like volume profile, like what we're seeing now, what is that telling me? Are you trying to align like support and resistance with prices where we had a lot of transaction volume, or how does that work on a very shallow level, of course?
Yeah, let's say that I'm not really using their terminology regarding supports and resistance, because I think it's a very perceptual thing as a trader. The same for me, I have the same opinion regarding the trend lines, for example, and all those kind of things. I don't think it directly applies to, like, it's not directly price related. So it doesn't influence the formation of the price and like what's next is going to happen. So I think it's us as human beings that are trying to explain in simple terms the complications of the market. And then we use for these purposes like things like support, resistance, trend lines, and this kind of, drawing like patterns, for example, and all this kind of thing. So trying to find something that our brain can hold on to. And what I rely in my trading, I try to rely on what has directly what has directly impacting the price formation, so the market auction. So for example, if there is a big volume area, it means there is lots of money that was invested in the zone. So if we are talking S&P 500, for example, in this area, we saw that lots of money has been traded here and invested. Now, this we need to tap into the statistics of the market. Around 80 to 90% of retail traders lose money. So the chances are that if retail trader enters short, the price is going to go up, right? The other side, if the retail trader enters buy, the price is going to go short. Now, with the big market players, is different because they are the liquidity of the market most often. They're using the coding, the high frequency coding and software that causes the market to move. So if they enter for a short, the price is going to go short because they are the liquidity of the market and they push the market in the direction they want to go. So if we have, now combining those two, if we have the big volume area here and the price is now below it, it means that the big players were entering short positions there, accumulating those short positions, pushing the price lower because this is where they wanted it to go. So when the price returns to this area, briefly, I'm expecting the same big players to protect their zones from the price going against them and in the drawdown. And if there's lots of money invested early and trading happening, the other chances are that there is big amount of limit orders still left. And limit orders act like a wall. If you look at the depths of market, for example, they stop the price from moving, where the market orders is the one that causes the price movement. And when the price approaches like a wall of orders, it stops. So I'm counting first on the big amount of limit orders that is going to act like an absorption and it's going to stop the price from going further. And secondly, I'm counting on those big players that initially push the market to still protect their zones of where they entered the market before. Now, for this, of course, I don't trade, for example, the long, let's say old volume zones where the price returned already several times because the liquidity that was left there was already taken. So there is less chances that the price is going to react on it. But on the new zones, like for example, oil now, you see this is basically what I was expecting to happen. So this is something that I'm willing to take as a buy because the price has never tested the zone before. And we had the accumulation and then the price moved back to the upside. I'm 100% sure that people knew that US is going to attack. So they invested the money before. The price spiked to the upside. It returns to the same areas, fills in the rest of the liquidity that is left. And it's going to most likely take it back up to a certain degree for big players to close their profits. So that's a logic.
For a trader like this, where would your stop typically be?
Well, it depends. So normally below the volume zone and also the mathematically calculated stop loss. So for example, for oil, my stop loss as an intraday trader, it's never less than 45 ticks. And then it can be bigger if the volume zone is bigger. So in this sense, for example, I'm going to place my stop loss in the low volume mode.
That would have been my intuition now as well. Yeah. I mean, then to the upside, that's a pretty good risk reward ratio also, no? Just by looking at that, you could have like 1.5 to 2, I think, in risk reward.
I think I'm going to be aiming at 1 to 2 risk to reward. But depends, because prices of oil may go even higher depending on the situation, how it's going to escalate. So I'm going to see.
Yeah, that's the thing. That's the thing. No, I mean, if there's like news coming out saying like things are escalating or things are calming down, this can of course quickly then overthrow everything we do as intraday traders, which of course usually is more on a more technical level. Like if you're looking for price action, if you're looking at volume profile. So in times like this, you always have to be a little bit careful, in my opinion, and accept that sometimes reality is going to change and the dice are going to be rolled new. This is especially why it is so important in times like this to stick to your risk management strategy.
Absolutely.
And at one time in the future, I will want to show also like extensive data on this, because I just did for one of my systems like 3 different comparisons. How does it perform when it trades a lot? Like when it enters a lot of the signals. What if it's like very picky about the signals? And how does it perform if it just always trades one signal at a time and there's a simple 1.5% trailing stop loss applied to it? And it turns out just the trailing stop loss has such a large positive effect on the return on investment over time, because it adds to the compounding effect also. You're not going to end up trading a lot. You're not even going to have well above 50% in a success rate. It's like 52 or 53%, but just because you have this trading stop for every position, and once a position starts running, you sometimes end up being like 5, 8, or even 10% in profit, that your profit factor and your Sharpe ratio is like really out of this world. And it's very counterintuitive to what I think a lot of traders, beginner traders at least, are doing, who always are very focused on success rate. I don't know about you, but this is typically from somebody who is rather new to trading. The first question I get: how high is your success rate on the system? And when I tell them that, well, for this one past year has been 52%, then typically the answer I get is like, I have somebody who has like 80 and 90% success. So I always ask, okay, show me the risk metrics. And I had one gentleman who's doing copy trading showing me his risk metrics, and it was like very impressive. He turned like 2,000 into 10,000. But if you looked into the details, like the Sharpe ratio, for example, which measures the risk-adjusted return, which usually, if you're a hedge fund, you aim to have like a Sharpe ratio of at least 1.5. This is where things are starting to get interesting. And this system had a Sharpe ratio of 0.07. And I told him, like, you are taking too much risk for the return from a position. You were lucky now because you have a high success rate. But even if you have a success rate of 90%, if you look at, let's say, 10,000 trades, you are going to have sooner or later a series of 5, 8, 10, maybe even 15 trades in a row where you lose money. And if your risk approach is then so aggressive, then you're probably going to see a drawdown of 60, 70, 80, or even 90% very quickly, or you crash the account. So it's like the longer, I mean, I've been doing this for very long already, but it's always kind of amazing for me how to look at the difference between a beginner trader and somebody professional like you, for example, saying like, okay, I usually have like this minimum distance for my stop loss, and I want to have a risk reward ratio of 1.5 to 2, else I'm not going to enter the trade, because it just doesn't make sense from a risk management and a statistical perspective. And I know it's like very boring for people probably watching, like, oh, like they're going on about managing your risk again. But I mean, I don't have like data on the funders accounts, like general data. I know a couple of people who have funded accounts here at the 5ers, and one thing they all combine is that you always hear from them, it's all about risk management. Yeah, strategy, of course, your system matters, but your system can be the best one in the world. If your risk management is not up to a professional level, you're going to end up lose money sooner or later, because your head is going to play with you.
100%, yeah, for sure. And even not only, with regarding the head, it's just statistics. Sometimes every single system have the downwards downfall, and it's gonna give, like you said, 10, 15 trades in a row, almost in a row, losing, right? And at that moment, you need to be able to include it in your system and still survive it.
Yep.
And if you can, then it doesn't matter how much profitability or win rate someone has, if it only lasts like 2 months, and then they need to start all over again, right?
There was a comment here earlier. I don't know if I can still find it, and sorry if I will take you now as an example for this. Jordi said here, an account of 10K gives you some relaxation to make a monthly income depending on your average monthly profit percentage. If you are 20% or above, 10K is enough to start. So if you make 20% consistently every month on average, doesn't matter if it's on a 1K, 10K, or 100K account, you would be in the 0.0001% of top traders in the world. You would outperform by far every hedge fund in this world. The top hedge funds that are consistently profit have between 14.5% and 16.5% of yearly average return. Yeah, given, of course, they manage a lot of more money, which is not all put into the same trading strategy. But nonetheless, this is completely unrealistic. You're not going to make 20% on average. You are going, maybe if you're lucky, you can do that a month, 2, maybe even 3. But chances are nearly 100% that at one point you're going to crash the account. If you make something between 1 to 3% already per month, you're very, very well off. And that's the beauty, if you can do that for the The5ers, for your evaluation account. Doesn't matter if it's a high stakes account or bootcamp account or whatever. Over time, you're going to build up a very well track record. You're going to get automatically funded. You're going to automatically scale up and end up not managing 10K, but managing something like 100K or even 500K if it's a high stakes account. So it takes time, it takes practice, and it takes a lot of discipline also, in my opinion, to get there. You're not going to do that within a month or 2, not within a week, not within 2 weeks. That's the same. If you want to do that in such a short period of time, you could as well say, I want to learn my beautiful native language of German within 2 weeks, which is impossible, even for Germans, and for any language, of course. You're not going to become fluent within 2 weeks. You can, if you're very diligent, maybe become fluent within a year, but not within a week, 2 or month or 2 months. So yeah, be realistic, guys. And this is, I know, something you don't like to hear me going on about this, but it's just part of the games. Manage your expectations. Now, I went on about risk management again, which I swore to myself I didn't want to do, but here we go.
Why? It's really important. I know it's like it's boring for people, it's exciting to enter trades and press this like buy or sell button, but not going to lead you anywhere, right? After all.
Yeah, that's the thing. Exactly. Sorry. I'm so shiny. I need to put on some makeup. That's better. What I want to say, we had some questions about the US dollar also, specifically dollar, euro, US dollar. Somebody asked earlier. I want to go here and maybe take a more broader look at the US dollar, specifically the US dollar index. We've been talking about this quite a lot. I know LJ and we had also quite a lot of discussions on this one, and I want to keep this also here a bit on a shallow level, because I think despite the pullback of the US dollar we are seeing, especially this morning already, and yeah, it's kind of like under Trump, the US dollar has become quite significantly weaker against most currencies, especially if we look at where we were before the election in euro dollar, where we are now. We were over 116, if I'm not mistaken, already last week. Am I telling you something wrong? Hold on a second, I should know that. Yeah, we were pretty much at 116. And now we have come down a little bit, and I think this is quite normal as a reaction to this war-like scenario we're seeing. If we're like classically, the US dollar is a risk-off currency. Like when there is shit going on in the world, wars, famines, anything, that makes people uneasy, they usually would flee into gold and they would buy the US dollar. And we have kind of seen a deviation from this pattern in the last months because of all the things Trump said about tariffs, because of all the, let's face this nonsense Trump has said during his presidency. Or if I say nonsense, I mean like one day he says one thing, the next day he says something completely different. And this is something markets don't like. Markets don't like uneasiness. They want strong leaders. They want to have reliable world leaders, obviously, because, if you take a lot of money, invest it into a country, invest it into a currency, you want to make sure that there's not somebody who changes his mind all of the time. And one thing for me in particular that was very interesting is that we kind of established ourselves underneath the area of 100 for the US dollar index. And this is so interesting because if we look at this extended corona and below this area here, we can see that we are in a very interesting range right now because we are exactly between the 61.8 Fibonacci retracement of when the US dollar became weaker, and this is where we bounced also the first time we went below, which was in April, and this is also where we seem to bounce back now. Now, like Anastasiia said, rightfully so earlier when talking about volume profiles, like when a spike, if I recall that correctly, if not, correct me please. If you see like an area where high volume was, I understood you, if it is tested for the first time, it's a valid zone where price might reverse. If it's tested like for the second, third time, it becomes obsolete, or at least it becomes weaker. And
it
correct,
weaker.
Yeah.
All traders who trade several times until the zone is broken.
Yeah.
So they keep trading the same zone. I'd say I stay away from it. So the first is that I trade.
This kind of stuck with me also because this is what you usually also see a lot of times when you use simple support and resistance, or also tools like Fibonacci retracements, that you see a pullback one time to it, you might see a second and third time, but every time the bounce, the reaction to the upside, so we're talking about this reaction here, becomes weaker. So it's going to be interesting, in my opinion, if we see something like this, like going up to 100 maybe, or slightly above that, and then seeing the continuation of the trend to the down. Because I think the US dollar index should have a hard time to establish itself well over 100 again. Yeah, we could see it pull back to 100, 180, 102, which of course would mean then equivalent movements for other US dollar dominated pairs like Euro US dollar. So in that case, you would see Euro US dollar, of course, going down because US dollar becoming stronger then again. But long term, I think, if I have to look at the next 3 to 6 months, my preferred trades would always be shorting the US dollar at the moment. How do you see that at the moment? Is that anything you look at, like that you say, like I'm thinking about what could happen, like the long term, like where's the major trend, the major pressure coming from, or are you really like into the intraday trends and more seeing it as a scalper where areas of high and low volume are?
I'm more of an intraday trader, I would say. But if we're talking about, actually, this is something I'm looking at right now. So you're talking about shorting US dollar. I'm actually looking about shorting for GBP USD right now. But realistically, if you talk about Trump, right? Trump wants US dollar to lose strength. Like he wants it to be able to become cheaper and be accessible for the trade, which is his main focus, as he's a businessman more than a politician in the first place as well. Now, I do think that the majority of the biggest drop for US dollar, we're going to see only when the rates are going to be cut, or at least closer to that point when we're going to see all the other data, the inflation, the housing market, cooling off, and then they're going to bring the rate, right? Then when the investors and people are going to know that the rate is going to likely be brought down, then we're going to see the start of the sharp movement to the downside. Now, FOMC last week said that we might expect there already during the summer to see the first rate cut, which I think also was the reason that US dollar moved sharper to the downside after that announcement. And I think the continuation will be only when we see the macro data, because if you're talking about long term, then the interest rate and how high is going to be held, one of the major aspects for where the DXY is going to go.
But it's kind of interesting if you see like at the individual members of a Fed, the governors, they are like really divided. You have like, if I'm not mistaken, they are still the majority who expect like 2 rate cuts this year, but the people who expect just 1 rate cut or no rate cuts as well, they are gaining strength again, because they obviously don't like to see inflation still being pretty sticky, with the danger of going higher in the next months due to the tariffs, and the job market still being so strong. But long term, this is going to be a bit devastating for the USA, because we have a lot of treasury bonds that are maturing now that need to be refinanced. And if you have a treasury bond, which a treasury bond meaning the US is borrowing money from you through this vehicle called treasury bond, and they of course have to pay you an interest rate for that, and maybe that interest rate in the past was like 0.5%, and now suddenly they have to pay you 4 or 4.5%, which has, because we're talking about trillions of US dollars, of course, this has quite a significant impact already on the future GDP. So you could see like a GDP reduction of 0.1, 0.2%, something like this in the future, just because the interest rate payments are so high. And this for me is very interesting, because I wonder what's going to happen if we see effects like this to the US dollar itself. Like, are people still going to buy US dollar and sell other currencies just because you get a higher interest rate for the US dollar? Or is that becoming less of a focus? One example we see right now with the US dollar, the Hong Kong dollar. The Hong Kong dollar is pegged at a rate to the US dollar, but the interest rate environment in Hong Kong is much, much lower than in the USA. So that's like the classic carry trade. You could borrow a Hong Kong dollar, they are pegged to the US dollar, and put it into a saving account in the US dollar, get 4% and pay something like 1%. So that's really a mismatch at the moment. Please don't do that. Of course, there are risks involving that as well. We've seen that many times before with the Swiss franc, for example. But it always hints at an imbalance of worldwide currency flows, in my opinion.
Yeah, I agree with you. But I'm basically looking for the short that you're talking about for the long term during the next, let's say, 2-3 months. I would say. Right now, I'm entering the short position, like intraday, right? It's a completely different perspective for the 6B, which is the equivalent for the GBP USD right now. And it's approximately 1 to 2 risk to reward from the current level that I'm looking at. So that's, the intraday, for me, the intraday ideas can be completely opposite from what I'm looking at for the long term.
Absolutely.
As long as I know the potential of how far I can expect things to go. I think macro and understanding the overall background is super important, because it gives you their ability to build like their realistic expectations from your trade, to not overhaul the trade, to not like to close it too soon, for example. While if you are not, like, if someone is not aware of at least basics of economy and what's happening in the world and the overall like momentum and direction of the assets, then it's very easy to get attached to the movements that are happening here and now on the smaller time frames. And more difficult to manage emotions, I think, more difficult to manage expectations, easier to close the trades too early, cut your profits too short, or overhold it and be trapped in a situation where the market reached your target, you didn't close it, and then the price pulled back. And then the hope kicks in, and I hope it's going to go there one more time, and then I promise I'm going to close it, right? And we all know how it ends up after a while.
Please just let me out of this trade. Next time I'm going to follow my risk management. We've been all there, I think, let's be honest.
Next time I will do it just one time. Let me get out of this trade. Yeah.
It's like back in school, when you messed up in a test, but you're
Yeah.
still like, pray, oh, please just let me get like a decent grade, I promise I'll study harder next time.
Yeah.
Yeah, I mean, that's basically it. I mean, of course, like all those macro long-term investing is kind of my bread and butter. So obviously I like to talk about this, but yeah, it doesn't really affect us if you are looking to scalp the markets, if your intraday trading doesn't affect you so much. Nonetheless, I think it's important to kind of be aware, like what is going on in the background. What are the currency flows? What are the big things like the investors with the real money, so the hedge funds, or let's say the institutional investors in general, what are they looking at? Because you're going to be less surprised when suddenly, and these moves normally appear suddenly, suddenly you have this volatility into a direction that you might not expect, because some catalyst like an economic indicator was worse or better than expected, and then you have a move, and it's important to kind of understand why is that going on the market right now, and why it maybe would be wise, not to try to trade against that. I mean, that's something you shouldn't do anyway, except you're looking at very, very good risk reward ratios. That's a different story then, but you don't need to make your life more complicated than it needs to be. It's already stressful enough and complicated as an intraday trader anyway.
Yeah, I agree with you.
May I ask you, how did you develop your trading strategy? Is that like something that developed naturally over time? Because it's always interesting. It's like the same question I ask everybody I stream with for the first time, because for me it's always very interesting to see. You have like all those people being successful in what they're doing, but everybody has like their own spin to it.
Well, I changed several times my strategy over the years. So I've been trading and exploring different things, and I think it's very unlikely that someone comes in the market and start trading them for the first time. They're gonna find what fits them most. Because as we come into the market, I think we also are not aware about our own personality as a trader, our own risk tolerance. Those are the things that we usually don't face in our daily life aspects. We don't really think about those, and trading faces us with lots of parts of ourselves that we didn't know even existed before. So when I came first into the market, I started trading based on just price action, which was extremely actually helpful. So I'm very grateful for this experience, because I was learning different patterns, and one of my first mentors was really tough on my education. So he was he figured out that the best way to be able to recognize a pattern is to find it 100 times on the chart, make 100 screenshots for one simple pattern, and send it over to him. So imagine if you alone in Head and Shoulders to recognize it in the chart. As a first-time trader, you need to find 100 of those and send it over, and then 100 of triangles and send it over, and then 100 of flag patterns and then send it over. So in the beginning, I was learning how to trade patterns and different price action aspects. I've tried several indicators which didn't work for me. So I've never actually connected with the indicators like RSIs, oscillators, and MAs and SMAs and all of this. And then from the price action that was talking to me more than anything else, I transferred to the Fibonacci. So there was a period of time when I only traded S&P 500 and NASDAQ for almost 2 years, and only using Fibonacci and price action. Nothing else, just simple one-zone price action confirmation, that's it. And it was perfectly working. It was during the first presidential term of Trump. And if you remember, during the S&P and NASDAQ, constantly going up almost always. So the only things that you needed to do, you needed to wait for the correction, which I used Fibonacci price action for, and then you buy it and you hold it, which was working out great. And then COVID hit and things changed, and I figured out that I need to find something that is gonna help me to fill in the gaps with the knowledge, because I still felt like I'm looking at the market. I always try to explain it in a way like you're looking at the market like in the image of something, like very flat. The only things that we see often is just candles or like this price chart moving, but not a lot of people actually think what is happening behind the chart. Like, why is the price moving? Why is it going up or down at this very moment? What is happening? Like, I know macroeconomics, okay, But if I know that oil is going to go, I don't know, up, I still need to be able to know when is a good moment to buy. Otherwise, I'm an investor. I buy it and I hold through the whole drawdown because I know that overall, through the period of 6 to 12 months, I'm expecting it to gain the value. Then it's something different. But as a trader, I need a combination of macroeconomics and also something else. And then I found the person who was trading volumes and order flow. And then my journey started. And I just went off exploring this world of, the market auction and how the orders are getting filled in the market, how the prices get formed. So that's how it all went. But I've tried pretty much a lot of things. I tried indicators, I tried price action patterns, I've tried different scanners. I've tried even trading binary options, which you're supposedly, I think you know how it turns out.
Yeah.
It's impossible to get the positive risk to reward there.
Yeah.
No, by no means. So.
Yeah, you have a better risk to reward if you play roulette and always bet on black or red there.
Exactly. It's even better than the binary options. And went through the different range of emotions throughout this period until I actually figured out that, okay, like volumes and order flow is something that clicked for me. And it took years. Like it took 4 years for me to get into volume and order flow. So for 4 years, I've been changing my strategy. And now I still adjust. Sometimes I adjust the parameters, I adjust the timing, the period of how long I hold the trades, depending on the market. Sometimes it's better for me to hold the trades, for example, for 2-3 days. And sometimes, like right now, I'm closing trades intraday mostly.
Yeah. Which makes sense, no? Because you adjust like to the unstable political landscape at the moment, but at any time, there could be some tweet from the orange gentleman or, some news that we cannot account for with any technical analysis in this world. Very interesting, very parallel also to my journey, especially to what I've kind of experienced in the last months. When I started appearing more regularly on those live streams, I asked the audience back then, okay, what do you want me to trade? And they said, like, because I was so stupid and mentioned like that I'm not any good at trading gold. So obviously, being the audience that I have, I said, Dirk, we want you to trade gold primarily. So I said, like, all right, I shoveled my own grave here in this case. So I need to trade this. And in the beginning, I struggled a lot because I applied what I usually do for my fundamental trades, which I hold for 3 to 5 years, or my option trades, which are usually trades I hold for 3 months, where I'm more of a contrarian trader, especially when it comes to fundamental. But of course, I looked like this is like overheating now, the economy, so I need to fade out of my positions. Or now the blood is on the street, economy is in shambles. This is probably a good time to buy. So translating that to short-term trading, to gold, I was trying the same. So I was trying a contrarian strategy, which worked okay-ish. I still ended up earning a lot of money, but it sent me into a roller coaster of emotions, because especially in the market we have had in gold now, up, then some correction, and then up again. It was really, the short positions really were difficult to handle, and frustrating to handle. And then a couple of weeks ago, I said, I need to readjust myself. I need a more relaxing strategy. I need to develop a trend following strategy. So I applied something that I've been doing for euro dollar in the past. Let me quickly, I don't have it right now on here, where I like to trade a strategy, which I say it's like a trend following momentum strategy, which measures the slope of and the angle of moving averages, of exponential moving averages, when they pass the 200 EMA. And if you have a potential slope, like it's within a very narrow band, and when you see a pullback, this usually is a good time to enter. So I applied this to gold, and it turned out, hey, this actually works very, very well. So I completely changed my trading setup. I'm now trading that. I'm seeing that it works. I just don't have the time to monitor the charts 12 hours a day. So I want to automate the whole thing for myself now. And I think that shows, same like your journey, things are always in development. You're never going to end up with something where you can say, this is it now. Now I can sit back, relax, and I just see the money flowing in. That might be true maybe for a couple of weeks or months if you're lucky, but then you'll encounter again that the markets are changing, that there's something in your strategy that you need to adapt, or that suddenly, probably not suddenly if you have a well-working strategy, but over time, your strategy actually loses its edge until it's at a point where it's just not worth trading anymore from a risk perspective. That happened several times over the past 26 years for me, that things that used to work suddenly didn't work anymore. Like back then, before everybody had trading view, there were like, if you're lucky, you had something called a Bloomberg terminal, which puts you down like $2,500 per month. And if you had that terminal, you had a news a knowledge advantage over people who didn't have that, because in that you find anything you can dream of, really. It's an amazing, very complex tool also. And that, in addition, that I was like connected to a lot of people in investment banks who run the order books, for example, for euro dollar. And we would have like chats where we talk to each other. So you would know, like somebody would scream, this and this entity is buying dollar like crazy at the moment. So you could jump onto the trade because you had that knowledge. It's almost like insider knowledge, actually, or honestly speaking now. For standards nowadays, back then nobody cared about that, but that was a valid trading strategy. You saw somebody, your buddy from JP Morgan might have called you, hey Dirk, I have here my big client, I cannot name him, but he wants to buy like $500 million right now. And they say, oh, okay, I need to buy some dollars. I need to short euro dollar now, and then I probably can gain like 4, 5, 6 pips, because that is an order, of course, that's moving the market already then. And or my boss, when he started out, like that was back in the 80s, he would trade gold on the German market and arbitrage what was going on the New York market. And because there was always a price, not always, but very often a price difference, and he would know about this price difference because he had a permanent telephone line to the trading floor in New York or in Chicago, as a matter of fact. So he would know like a couple of minutes ahead, always, hey, the price in New York is like this. It's like $5 higher than in Germany right now. So I can sell right now in Chicago, New York, and buy back at the same time in Germany, and then settle it against each other. Classic arbitrage. But also, of course, this is not possible with the connections we have nowadays, except maybe, you are like a latency arbitrage person who works probably now with nanoseconds of price difference.
And super high frequency trading as well, which is not possible to do manually. But I think the ineffectiveness of the market, that essentially what you are talking about, right? Ineffectiveness of like the difference in prices, where the movement that is happening, like difference in different exchanges, is super interesting. It's still possible to do right now. It's just more difficult to find those, I think, situations. But it's I think it's one of the most effective ways for trading.
Yeah, it's basically, I'm not going to call it risk-free trading, but almost risk-free trading. There's always risk involved, of course, because if you have a difference in how fast your order executed at those exchanges, then you have a price difference also very quickly. But for me, it's like since this is not working for us regular people anymore, it's even not working for those people who used to do high latency arbitrage anymore. I know one of those guys, he's not doing that anymore because he said, if you want to do that, the setup now you are going to upfront pay millions and millions of US dollars without any guarantee that you're going to earn anything back. So he's not doing that anymore. The risk is too high in comparison to the reward. But this is exactly how markets should work. No, it's like we as traders, we find with our trading strategies something that the market is not yet seeing. And so we find an alpha that we are kind of exploiting. And over time, there's a high chance that other people will notice that as well. This is also why when you ask successful traders, hey, can you share your trading strategy in detail with you? They won't, for good reason. I would never completely transparent share my trading strategy with you. I would be an idiot to do that. What I can do is to tell you on a shallow level, hey, this is what I'm doing. This is what works for me. Do with it what you want. All the details you need to find out yourself. But here's an approach how maybe I can inspire you to look at the markets, because imagine like one day I'm not streaming anymore, or you're not streaming anymore, or Victor or whoever. What are you going to do then? When you're basically back to square one. So take it as an inspiration to develop your own strategy, everything we are doing here. Don't expect like that we share our whole playbook with you. At least I hope you're not doing that, Anastasiia.
No. But imagine, even if, let's say that I would, or you would, there is a saying that even if you would write all our trading rules on the floor on the Wall Street, people would still keep losing money, because it's not only about the rules; it's about how one applies them. Like you can have all the rules and know exactly what to do step by step, but still mess it up, and someone can still lose money. You can give 9 out of 10 winning signals, for example, if we are talking signal providing, right? 9 out of 10. Which is not what we are doing here, guys, by the way, not a signal providing. But if someone follows a signal group and they have 9 out of 10 trades winning and 1 losing, there still will be people who will be losing money, because they will miss out on 8 out of 10. They will take 1 or like 2 profitable, and then they will feel super confident. They will risk it all, go all in on the last one, which will be losing.
Yeah.
So there is still always a way for people to lose money, even if you give them the full developed trading system that performs flawlessly by the certain rules.
Yeah, this is really where then risk management, where the mindset, the psyche comes in. I understand. I mean, I did the same when I was very young. I said, oh, wow, this guy is so successful. I'm just going to follow his trade. And 4 or 5 trades in a row, I earned money. Now I'm going big in. If I do this again, next trade, I'm going to earn 1,000 or 5,000 euro or something like this. Well, that next trade crashed my account. And not only once, I sadly must admit. I think it's normal. It's the journey we all go through. This is why I can only underline also what Anastasiia just said. We are not signal providers. Everything we show here, when we talk about trading, when we enter trades live here also, this is because of our own strategy and risk assessment. This is not meant for you to necessarily follow us. And I mean, as a matter of fact, very often you'll see us also losing money, which is part of the game, no? This is normal. And by the way, there's a nice study which was done, I think must have been like 10 years ago, which looked at the performance of hedge funds and then looked at the clients of those hedge funds. Did they also earn money or lose money? And it turns out for a lot of very profitable hedge funds, the clients still ended up losing money. Why? Because they always threw money at the hedge fund after the hedge fund had a very positive year. And statistically, after a very positive year, it's often that you see a moderate year or even a year with a drawdown. And when the drawdown came, they would withdraw their money again and wait until the hedge fund had a positive year and then throw their money again at them. So very pro-cyclical investment behavior. This is what
I think that people are doing with Bitcoin.
Yeah, with Bitcoin, with copy trading, we see that a lot. Also, wow, this strategy had like 100% return last month, or I'm going to invest in this one. Yeah. Then, bam, money is gone because it was just an outlier, for example.
Yeah.
And so if you would have listened to us, sorry, Suraj, I think might be pronounced. You're not going to make on average 10 months per month. It's not possible without going too crazy on the risk, which is going to lead to crash your account sooner or later.
It's just let's keep it as it's not possible. Like people come and they're like, "How can I make $200 every day?" You are not going to make $200 every day.
Well, like you can if you have like $1 million on your account.
Yeah, but I mean, for a short period of time, you can be very consistent. For longer period of time, you're not going to be able to go do the same thing again and again every single day, because not only because of us as a trader, but the market is different. Sometimes market is not going to give any opportunities. Sometimes it will give a lot of opportunities, and as a good trader, we need to take an advantage of it, or at least try our best to do so. And sometimes we need to stay away and not do anything, like don't touch the market at all.
Yeah.
When craziness happens, or when nothing happens at all, for instance, when the market is dead, for example, and it's just ranging. So I think it's extremely important to be able to adjust. And also, I know that everyone is aiming to be consistent in a sense, like daily result or weekly result, monthly result, the same and the same. But I think with some time passes and I get some perspective, like Dirk, you've been trading for many, many years, you get some perspective on the market and you understand that it's okay if this is a losing week, if it's okay that it's a losing month. Because statistically, and I really love how statistically you approach it, how you are so detailed about what you're looking for in the strategy development and how to adjust it. Like you were talking about adjustment to the trend following system right now. I really love this approach because I think this is where the key lies. Not trying to blindly, find something that works or adjusting, but actually look at numbers, what makes sense now. And
I was chatting exactly about this with one of our hosts here, with Michael, to be more precise, the other week, and said, in my opinion, we are at a time now in history that the last time I experienced when things like TradingView, like charting software at good price levels became available to retail traders. Like when I started trading, this was simply not possible. We got like every month books with printed out charts that we could, with our lineal and pencils, analyze when, for example, send. It's unimaginable nowadays, no? Or you would have like a Bloomberg terminal. Even that back then didn't have so great charting functionalities. So it became like the market became more accessible. Now we are at a period in time where this statistical analysis and tweaking of trading system is also possible for everybody, because you can use tools like ChatGPT, you can use tools like Claude for testing your trading system or even finding out statistical edges for you. And this is really what I'm doing with all my trading systems right now. I'm giving, for example, Claude something, saying, okay, here if you have like 1 year of Renko data, these are my entry and exit rules based on this data bank of price action and Fibonacci levels, for example, and a slope of moving averages. Can you please examine like the average expectancy per signal? Can you maybe give me suggestions if there are certain times at the day where signals are more profitable than on other days? Do you give me a suggestion how I should handle risk? And over time, like, of course, you cannot believe everything that the AI is going to tell you. It's going to hallucinate sometimes. So you still need to be aware of if it returns something like to you, like, like this, you are going to earn 3,000% a year with just a drawdown of 1% or something like this. Then you need to know, like, okay, this cannot be realistical. I need to fact check this a bit. But you can, things like this, coding this manually just 5 years ago took me a week just to get the basic structure of back testing, of adjusting components, of applying machine learning to it. Took me a week. Now I can do it in half an hour, just by with the prompts I've ready. And there's nothing holding you from that. And you would be surprised. And actually, we did this last Monday. I asked the audience, hey, give me some indicators. We are going to try to use Claude now to design a trading system for us. And it ended up with a trading system that looked quite promising. Not the best I've ever seen, but based on that, we used like just standard vanilla indicators. It found some edge in it. And nothing is keeping you out there, guys, from doing this as well. It's a lot of fun. Yeah, for some people, of course, it might be a bit boring also. But the level of satisfaction when you suddenly discover, hey, my initial idea with some tweaks to it seems to be something that's actually working quite well. This is the best feeling you can have as a trader in the world, where you think, hey, I discovered something that nobody else yet has discovered. I found my edge in the markets.
Yeah.
And over time, this is like arbitrage trading going to erode again, because everybody's because we'll have institutions doing this on levels with amounts of money that we cannot imagine, that have like budgets of $100 million per year, for scientific research and back testing and so on. But at the moment, this is really an edge you can have. So I really urge everyone to use it as not as the holy grail. Again, yeah, there's never going to be the holy grail of trading the indicator or strategy that always is correct, that gives you insane amounts of return with no risk. It's just not possible. But finding your edge in a matter of time that if you do that manually, probably would take you half a year or a year.
Yeah.
So that's really something I almost do every day nowadays. Which is a good thing and a bad thing, because I'm not coding so much manually anymore. So I need to make sure I still know a thing or two to fact check it, but it just makes things so much easier. Such a relief.
Yeah, I think it makes things so much easier, but also it gives a false image, if you interpret it correctly, that it's incorrectly, that it's easy. People think trading is easy, and it's not. It's simple, can be simple, but it's never gonna be easy, because it's always adjusting, like we said already before. It's never stable consistently, and it's always a game with a mind in the first place. So it's never easy, So although it's easy to approach it right now and find a way better than ever it's been before, it still needs requires being conscious enough about, all the traps that we might fall into as human beings as well.
Yeah. And it's like, also, if you're using TradingView, for example, or any other charting software, if you go up here, you open this menu, go here to export chart data, it's going to export all the chart data that's available, for example, for gold spot, gold US dollar, that is, price feed from or under 1 second updated Renko charts with a box size of 1, and my strategy applied to it. And you can just throw this data into, for example, ChatGPT, and ask it, hey, ChatGPT, tell me something, what you see in the data, analyze it a bit for me as a first prompt, and from that you'll get some ideas, because those AIs are very good in seeing some patterns that you normally do not see in there.
Yeah, absolutely. I should actually give it
Give it a try. Yeah.
Yeah, because I tried a few times and didn't really. I'm very horrible in coding and all of this kind of thing, so it didn't work out for me.
I'm a very, very mediocre coder, but it's just like really for testing, how it is sometimes. Sometimes you see something and you think to yourself, what I just saw there, is that like something, when this combination of whatever happens, normally the price goes up or goes down or whatever, and then just take this and be able to quickly backtest that. Is that actually something, or am I just making up things? Because we as humans, we are not born traders, our brains are very actually not good for trading, because we like to see patterns, and we like to see patterns very often where no patterns are. You just need to look at the clouds for a while, and maybe that's from back then when we are living in the jungle and we need to spot tigers and other wild animals that wanted to eat us in the jungle. I don't know, I'm just making things up right now, but we tend to overinterpret something that we see recently and make like a long-term pattern out of it, when in reality it's very often just a coincidence and not a valid strategy. Yeah,
for sure. But I think it makes sense what you said. I don't think you're making it up. I think it's somewhere in the back of our mind it actually is something like this, that we got used to as well.
Yeah. One thing I'm looking at right now, guys, because I still remember that you are, if I'm not mistaken, you were saying you were looking for short entries into the S&P 500 or NASDAQ. What was it?
Yeah, S&P 500 as well.
What I see right now is that we might actually see a change in the trajectory of a market. Yeah, we're seeing this right now here. My system is printing with. I'm going to go long now in gold. Actually, sorry. What do we have here? Give me a little bit. Why can't I access my account here? Hello?
And guys, while Dirk is opening his position long on gold, remember that we have the giveaway going on. The giveaway link is pinned in the description and in the comments to the rest of this video. So make sure that you go and you apply, because we have special giveaways every single day of this week. So make sure that you attend today's, tomorrow's, Wednesday and Thursday streams to have the highest chance of winning prizes. and evaluation accounts as well. So make sure that you stay with us. And by the way, we are almost at 75,000 subscribers.
Nice.
We appreciate every single one of you joining us, being here, part of the community of the 5ers. The 5ers keep growing, and we hope that we keep bringing value to you as traders and contribute to traders' growth as well. And if we can hit 75,000 subscribers this week as a team, as a community, then next week Jonathan's going to be back from vacation and going to host a very, very special giveaway. That's going to be a massive one. So make sure that you hit the subscribe button if you haven't done it yet, because then you're also going to be notified about all the streams, all the events that we are hosting. Sometimes we host very special events that you also don't want to miss out. So make sure that you hit the like button on the video and subscribe and enter the today's giveaway in the description of the video.
Correct. Where is my...
Did it let you in your account?
Yeah. That was just me being stupid. But now I want to find my window and with where I can actually see my position is gone. Oh, got MT5 and Dirk. It's a combination. Anyway, I'm in the trade. My stop loss is set, so all is good. Yeah, this is actually what I just wanted to talk about. For me, it looks a little bit. We see a shift momentum in gold right now. So where the early session of Monday morning was more to the downside, now we're seeing like a shift to the upside, which usually also should translate in that sooner or later we should see the US stock indices moving to the downside. Usually when we see gold moving up, we are going to see pressure on the stock markets. So that might, let's see, be a nice entry. If not, I'm risking 0.5% on this trade, actually, which is a bit normally too much for my appetite, but it's a 20K high stakes account. So if I choose with my stop loss, which is at 3355 for that long trade, a lower trading size, I'm going to be very quickly under the minimum trade size there. So normally I would go with something like 0.1% stop loss, for example. And for this one, I'm applying like this stop loss now, and I'm going to let the trading stop run with a position. And if the move is strong enough, then we're going to end up at break even. If the move is very strong, I can ride it, not to the very top, but if we don't have major pullbacks for a very long time, which doesn't happen very often. But when it happens, it's like super profitable. Then you end up with a risk reward, sometimes of 5 or 6 or 7 to 1.
Wow. 7 to 1 is a massive risk to reward.
It's very rare, no, that you have something like this. I know, I think Jonathan told me once, Victor once had a trade with 25 to 1 risk reward ratio, which is insane.
This is great.
Yeah, don't, for Renko charts, from my experience, like these head and shoulders formations, or also the quasi structures that Victor likes to use a lot, they don't work there very well, because I think they are also depending on the timing period. But it's just my educated guess. I haven't actually back tested that yet. There's a question for you, Anastasiia.
Yeah. Let's have a look at it. At the DXY, shall we? DX. I'm still waiting for the confirmation for S&P. So let's have a look at the DXY for current moment. So are you looking at here? Are you looking at the futures though? Are you looking at the CFDs? 99.5. DJ, are you looking at futures? So are you looking at the CFD for the specific data on the specific provider of this trading field? Let me know, because the prices are going to be different. But 99.5 for me is all the way here, and I don't see any volumes at this level. So I'm assuming that you are using the different, that you are using a different provider for the data. So 99.5 DJ, for me personally, I don't see anything here. For me, the DXY right now is at the volume zone. And normally I would expect the price to go down already right now here. However, as we can see, the movement to the upside was quite sharp. Now we do need to realize that US did step into the war with Iran, and beside this, we do have the protests right now in the US concerning their the intervention into the war between Iran and Israel. So the DXY is most likely going to be affected as well in the next couple of days, hours for sure. So, but right now, normally I'm expecting some kind of rejection, at least for the DXY to the downside. Although if we do break this zone here, and if the price closes above the 99 level, I'm going to be looking for the continuation for a long. Like I'm not looking for, I'm right now shorting the 6B, which is GBP USD. So if hopefully DXY, for me personally, hopefully if it closes above, I'm going to be looking for the short-term continuation to the upside. And the next level I'm looking for the rejection is about 100.2 for the DXY specifically. But again, DJ, if you're looking for the specific CFD IC markets you're looking at, okay, well, let's change.
Sorry, excuse me for 1 minute. I accidentally unplugged one of my monitors here when I put my desk up. I'll be back right away.
Of course. IC markets, don't, like, to be honest with you, I don't even have it. I always use the DX related price. Let me just finish the analysis here, and DJ, you can transfer it to the IC markets levels. Okay, so I relate to the exchange for the futures because this is a centralized data, and I find it more reliable than the brokers data where you have only limited access to the order flow inside. So if the price closes, let's say they're above 99.00, so this 4-hour candle closes with barely no wick to the upside in 13 minutes from now, or the next hourly candle can break this level, I'm going to be looking for a long on the DXY. Right now, I'm in short position for GBP USD, and hopefully the DXY will be able to break through, because then I can, my short position is going to actually be quite a good one. The giveaway is happening every day, but the winners are going to be announced in the end of the week. So make sure that you enter the giveaway, because then you have a chance to winning great prizes together with evaluation accounts, which is absolutely great. I wish something like this would be happening when I was starting with prop firms before, and it wasn't. So you get a chance to get free accounts. How amazing is that? Like, how cool is that? So make sure that you enter a giveaway, and the winners are going to be announced.
And part of the game is also, of course, to leave us a like here, because this is basically, we as streamers, this is our food. This is what we live off. Vampires suck blood. We consume likes. And we are at 167 likes. Would be nice to see us hitting maybe 200 likes until the end of our session, so we can then hand over to, I think Michael and LJ are probably the next one after us in about half an hour.
Dirk, I will actually have to be leaving you very soon.
No.
I do have an appointment, so the last half an hour I'll be
okay.
to leave you. But before that, DJ is asking what is the DX future symbol on TradingView. So DJ, if you want to access the futures data, you just type DX, and it's going to be the first one on the ICU's exchange, and you will see the US dollar index futures right here. So this is normally what I rely on since I trade volumes. I want to be able to access the centralized volumes where you have the majority of them based. So that's what I do normally. And it was really a pleasure to be able to host the live stream with you. The
pleasure was on my side.
The expertise and the value that you bring to the table to our audience is absolutely priceless. I personally look forward to learn more from you. The approach that you have really does resonate with me a lot, and I'm really looking forward to host more streams with you. And guys, you are left in the best hands possible. Dirk has so much knowledge. Make sure that you ask many questions, because once again, I wish I would know people like this when I first started. I believe I would be able to shorten my life, like my past as a trader a lot.
If I wouldn't have my lights on, you could see me like turning red now and blushing. Thank you very much. It was a lot of fun. I like your approach to trading very much, Anastasiia. And this is also, of course, why I asked so many questions, because it's something new for me, looking at volume profile. Looking forward to learning more about this. And if I'm not mistaken, we have our next chance already on Wednesday, no? When I'm going to join you for a little while to cover for our vacation boy, Jonathan.
Exactly. Yes. So I'm really looking forward to, guys. Make sure
Likewise.
to tune in every single day of this week as well for all our amazing hosts. Dirk, thank you so much. And I'll look forward to see you on Wednesday again.
All righty. Take care, Anastasiia. Bye-bye.
Take care.
Good. Then now I need to adjust my position a little bit. Otherwise it looks weird. Or is there another setting? Or something like this. I think that looks a bit nicer. Like this. Yeah, thanks again to Anastasiia. Was, of course, very, very nice to always hear all those different approaches when it comes to trading. As I said, looking at trading, looking at volume profiles. I mean, of course, something I've heard, of course, before about, but I've never seen anybody really being as successful with this as Anastasiia is. So awesome. To check that out and to learn more about this. Good, guys. So we still have about half an hour left before I'm going to hand over to Michael and LJ. I want to mention at this point also again that we have a trading competition. So if you just tuned in and you haven't heard about it, we don't have a trading competition. We have a giveaway every day this week. We are giving away high stake trading accounts. There's a link in the description of this video where you can enter this giveaway. So you might want to do that. Part of it is leaving us, of course, a like and subscribing here to the channel. We are aiming of reaching 75,000 subscribers this week. And if we do that, and we're not far away from it, only 600 more subscribers, then we are going to have another massive giveaway again next week when Jonathan is back. There was the question earlier when we are going to give away these accounts. So we're giving away every day, a couple of accounts, but the whole draw for it will be during the live streams on Thursday. So you have a chance every day to enter again. I'm seeing here a question about coding from Supayit. Sorry if I don't pronounce your name correct, Dirk. I am not that quite good in programming, but I do have a successful trading strategy which I trade manually, but can be put into an EA. Could you recommend any good free YouTube course which I can use? The good thing is, first of all, I might be a decent coder by now, but I'm also far away from somebody who maybe has a software engineering background. My recommendation here really is, of course, it's good if you want to learn it yourself. There are plenty of courses out there. I highly recommend then also that you start with learning Python. Python, because there are a lot of libraries for developing trading strategies, backtesting trading strategies, even API with ready-made configurations to exchanges. So that's the go-to coding language, in my opinion, if you want to get into this. However, you also don't need to do everything manually yourself anymore. You could also download a chart, for example, with your setup for your trading strategy. As I said earlier, you can do that. Let's say, for example, you have loaded your trading strategy into this chart. I said it earlier, for example, here my gold trading strategy. And then I would go back and zoom out to see how much data is there actually available with my settings. If you have 1 minute intraday data, you're not going to get 1 year of data to download from TradingView most likely. But this one goes, for example, quite far back. This is 1 second Renko data, which goes all the way back until October 2024. So, I mean, that's already some really decent time, in my opinion. So you can go up here and you go to export chart data. you can keep the Unix timestamp here, export it, then you have it in your download folder on your PC or laptop. Then you can just upload this. It's going to be a CSV file, so something you normally would use in Excel, for example. You can upload this in, I recommend Claude for it. So Claude is a language model like OpenAI has with ChatGPT. And then, for example, I would start like, hey, tell me something about the data I just uploaded. And then it will probably tell you something like, oh, okay, you uploaded here gold, in my case, data, which spans from October 2024 to June 23rd, 2025. And there are buy and sell signals on this data. So this is how I always start. And then you, for example, can go about, okay, tell me like more details about the buy and sell signals. Analyze how profitable they are. Analyze for me if there are certain times of the day where those signals are more profitable than less. And then over time, you'll get a feeling, not a feeling, you actually get data on, do I have an edge there? Do I have a trading system that works? Or do I need to work further on this trading system? Because many times what I encountered is that, especially if you look at very low time frame charts, so if you're somebody looking at 1 minute charts or 5 minute charts or even 15-minute charts for something like gold or Forex pairs, that you think you have the data and that you think you have a trading system, but if you analyze it, you'll see something like, oh, wow, this works. That makes money over time. But if you then tell, for example, ChatGPT, can you test it if you include a spread of 1 pip or whatever, if you include slippage of 0.2 pips, and if you include a trading commissions of round trip $4 per lot traded, then you'll encounter that many of those short-term trading systems actually become unprofitable because the spread, slippage, and commissions are eating away all of your profit and more of your profit. But that is normal. Because that doesn't mean then necessarily also that the trading system doesn't work, but it means that you need to be more picky. Then you could, for example, tell ChatGPT something like, okay, taking this into account, give me suggestions, which are the signals that are most promising one. Do they appear at certain times of a day? Do they appear if I put more indicators or price action into the mix, and so on and so forth? It's really limitless. The nice thing is, you don't need to, if you want to code something like this manually, even if you are a seasoned coder, it's going to take quite some time with all the bug fixing. So you're not going to be able to answer specific questions like this within the next 20 minutes. But this is where AI, where those language models excel, in my opinion, to take this task off your shoulder and help it with it. As I said before, you still need to make sure that what comes out as a result out of this language model, out of the AI, is valid. So if you see any great outliers, I made the example before. I once had, for example, Claude telling me, your trading strategy is perfect. You would have made 3,000% with just 10% drawdown over the last years. And the first thing then I always do is like, okay, give me all the data, let me download this, and then in my case, I use Claude. Then I'll open a new chat and tell the AI, you know what? Can you fact check for me if with this rule, with this spread, with this commission, this is really the outcome of this trading strategy? And very often you'll get a different result. And you'll see like, oh, okay, there was a mathematical error actually in the first development of that trading strategy or backtesting of that trading strategy. But so it's not taking the actual creative work off your shoulder. It's not taking the fact checking off your shoulder. It just makes it very much faster than anything you had. I mean, you really just need to, for this task, you just need to go 2 years back, and this was not possible, or 3 years back, and this was not possible. So I said it before, do yourself a favor and try it. DeepSeek, for example, is also one of those models. I have not tested DeepSeek yet myself, but yes, for sure. I'm personally using Claude. I'm a max member of Claude, so I pay $200 for that every month. And this alone shows, I think, how important for me or this analysis, the backtesting part, the data and fact checking is for me. As you might have heard just now, I'm actually divided when it comes about this. Algo trading is more effective if your strategy works, if your risk management is set, if you know on backtest, unoptimized backtests, that is, so don't curve fit your system, that your trading strategy works. And then algo trading is better. However, it doesn't take off your shoulders that you need to understand on a level how the markets work, how are prices forms, what is risk on, what is risk off, how do those indicators like the RSI, moving averages, and so on work? Why are the indices normally going down when gold is going up? What is the mechanism behind that? What is going on a fundamental level? It doesn't take that off your shoulders. Well, I think I just explained what the benefit is. The actual fact benefit is that I can have much longer chats with Claude without using the daily limit. As a matter of fact, 20 times as long as I would have in the free version. And if you do coding with Claude, if you do analysis, you very quickly reach those limits otherwise, because we're very quickly talking about hundreds and thousands of lines of code. There is no moving average on this chart. What you see there is a Renko chart. There's no moving average applied to. There are moving averages applied to the red and green dots you see there. But what exactly those are and in what combination, I'm not going to share with you. Sorry. Well, you're limited on the high stakes account to what you can risk anyway. Let me quickly, before I tell you something that is not correct, look at the rules here for you. Just give me a second. Sorry, guys, had to attend here very quickly to a trade again. Okay, here we go. So, come on, what is this here? So for high stakes, let me quickly look here. You have a maximum daily loss level. Yeah, so I was correct, of 5% there anyway. So you can, a maximum, if you lose more than 5% or 5% and more on a date, your account is terminated anyway. So that is the highest risk you can take there. That doesn't necessarily mean you need to take that. For example, I'm trading with a 0.5% risk on that trade. So I would need probably 12 or 13 trades to reach that. I would long before that stop trading. So you shouldn't do something probably like risking 3% per trade, because then if you lose 2 trades in a row, you are already going to lose your account there. Well, why are not more many trading platinum? Is there any reason? Yeah, because gold is used more, first of all, as a precious metal. So the perception of gold being more valuable is still higher than for platinum. This is a historic reason. Gold is more used also on an industrial scale, for example, for semiconductors, chips for, when you look at your PC or your laptop or your mobile phone, So it's a bit more historical. And the simple fact also, you have a higher liquidity in gold than you have in any other precious metal. And liquidity is something that you always should be looking for. High liquidity, I mean, that is because you don't want to enter those trading periods where the spread goes very wide and then you're maybe stopped out. I'm sure those of you who have been trading with different brokers out there sometimes have experienced that. You are maybe in a trade in some forex pair like, I don't know, euro, Indonesian rupiah, for example, and then suddenly at night the spread becomes wide, and just because the spread becomes wide, you're stopped out of your position. If you have high liquidity in a forex pair like euro dollar, for example, this usually doesn't happen that fast. Let me just scroll up here, and I want to quickly check also how many likes do we have now. We are now at 220 likes. Thank you. So we reached the 200 likes that I wanted. Let's see if we can push this in the next 50 minutes still to 250 likes. Not only because of a giveaway. Again, you'll find the link in the description of this video to our giveaway where you can win high stakes accounts every day of the week until Thursday this week. But also once we hand over to LJ and Michael, who are next on. All right, we haven't actually looked. That's a good point. I saw earlier some questions about Bitcoin. So let's have a quick look at Bitcoin. Wrong one. So Bitcoin has, of course, reacted to what was going on in the Middle East on the weekend, simply due to the fact that it's trading also on a Saturday and Sunday. So we had the direct reaction to that. What was good is it was not a total crash that we were looking at. So especially if we compare here the candles we saw on the weekend, so Saturday and Sunday, we saw a max volatility here of 5.5%, which is, if you are trading Forex, then it is, of course, a lot. But for Bitcoin or for crypto in general, that is not so much. One thing that kind of spoils the party for me is, but that could have played out already, is I drew this a couple of days ago, actually, and said, for me, it looks like we are in a compression zone. And normally, if you are in a zone of compression, so the zone here I'm talking about, then sooner or later you're going to have a volatile breakout to the upside or downside. We had this breakout because of the news surrounding the Middle East and the USA entering de facto the war of Israel and Iran to the downside already. And one of my go-to things that I looked in at in a bull market is this blue line here, which is an 8 weeks moving average. We are in a daily chart, but those are weekly moving averages. And those red and yellow averages, which are the so-called bull market support bands, which you can also find here, which is a 20 weeks simple moving average and a 21 weeks exponential moving averages. So it's also available as an indicator on TradingView for free. Somebody coded it there in the community. So anyway, when we see a closing of a price below the 8 weeks moving average, we often see Bitcoin pulling back to the bull market support bands, which it almost did. It's not, we're not in a world where everything is like, oh, it's perfect, but we had this spike down here to, what was that down here, 98,000 almost. And the upper one is trading of a bull market support band is trading at 96,250. So it almost reached here. So the scenario could be that it was that already, and we are returning into our compression zone or even breaking out to the upside, or that we still are going to see a pullback into this. I defined it here as a target zone between 94.4 and 96,300 US dollars. Long term, however, we are technically still in a phase where we, by definition, are in a bull market. So those of you who have been watching these live streams know I like to pull out this chart every now and then. These red and green bands, they are a simple logarithmic regression that I put on a chart. Why a logarithmic regression? Because this is a logarithmic Bitcoin chart. And by the way, this one you'll also find here. So if you put in Bitcoin logarithmic regression, you'll find this indicator as well. Bitcoin logarithmic regression, the good, the bad, and the Bitcoin. That's me. I made this script publicly available, so you can try this out for yourself. Only works on Bitcoin, though, please. It's not meant for other assets, and it's important that you put your chart to logarithmic. And I'm showing you this because this logarithmic regression works out very well over the course of history. So starting here at the halving in 2012, we topped out at the red channel, at the top of the red channel. Then if we go forward, 2016, the halving, we traded a while in this green channel, which is like the normal price distribution according to the regression of Bitcoin. Then the bull market frenzy started when we broke out of the green channel, also went all the way up to the top of the red channel here. Then we move forward to 2020 after the halving. Here also we are trading a little while in the green channel. Then we broke out and topped out at the lower band of this red channel. So what happened 4 times in the past, there's a chance at least that it's going to happen a 5th time. So by definition, our target zone should be somewhere here at the lower red channel, which currently lies at $238,000, or upper one, which lies at $331,000 normally. However, since there's a timing issue involved, because reaching this top of a channel usually happens within those blue time bands I drew here. So somewhere between this one here, which already has passed, but was late April of 2025, and this time period here, which is October of 2025. So if the price behavior is like it was the last 4 halvings, then we should see Bitcoin topping out somewhere in this box up there. The only thing that's spoiling the party, in my opinion, a bit is that we are slowly running out of time to do that. So we don't have so much time anymore really to see prices like this. So it might have, I'm saying it might have. Yeah, I'm not saying this is for sure what has happened. It might be that because of something called alpha decay, I'm going to explain in a while what that is. Now, going forward in time, it's more likely that the tops of bull markets are going to be the top of a green channel. So something we saw here at 108,000, to an extent also what we saw at 111,000. That's a possibility. I don't know yet, and time will tell. But I say this model is kind of running out of time. If we want to see those really blow off prices of Bitcoin bull market that we saw during the last periods of time after the halvings as well, well, it needs to happen within the next 4 months then, according to this model. There are other models as well. One of those I can show you here as well. For example, by an Italian physicist, his first name is Giovanni. I don't have actually no idea how his last name is, who thinks that Bitcoin is a power law, a so-called power law. And he's projecting that Bitcoin is going to top out somewhere mid to late January 2026 at a price of roughly $199,000. So according to this model, there's still some more time left. There's still half a year, or actually almost 7 months left until we reach this top. Let's see. You know, this is always interesting, an interesting time. If this model, the logarithmic regression, which is a model I've been using for 2 cycles now, which work perfectly for me, is still something that's applicable and still viable. And or if this power law model of Giovanni is something that really turns out to be correct, From my experience, every model sooner or later is going to need adjustment. But it's kind of funny, you know, in Bitcoin, you always, since 2000 and what was it, 11, we've always seen those cycles of 3 years of rising prices, 1 bear market, 3 years bull market, 1 bear market here. It's really, really, it basically punches into your face. And I'm always surprised that not more people have seen these patterns yet. So let's see. A lot is going to depend, obviously, also on how the world politics develop. Of course, if we see some kind of escalation from the Middle East conflict, if we see an escalation between China and Taiwan, for example, things will be very, very different. But if we're talking about a scenario of World War III, for example, here, I think we're going to have other problems to worry about than what the price of Bitcoin or what the price of gold is currently doing. Probably we are more concerned than in finding shelter. Somebody screaming here at me, you want to see the Turkish lira? What is that supposed to be, Eric? Which currency pair do you want to see? Dollar, Turkey, or which one are you specifically asking for? Yeah, gold, we've been talking a lot about now. I have a long position in gold currently. Let's see how that one is developed. Maybe I'm coming in later and update you on that trade again. But for now, it's doing nothing. So just keep it open. No answer from Eric. Caps locking me and then not answering which Turkey pair he wants to see or have analyzed. I tend to agree with that, not because I want to say something back about Turkey, but the thing is, we can have a quick look at it. The thing is, it's a high inflation, high interest rate environment. Yeah, this pretty much shows what I'm talking about. If you see a chart like this, would you buy the Turkish hour? Would you buy the Turkish lira, or wouldn't you buy the Turkish lira? What do you mean we are waiting for a question for hours? What question are you talking about? Yeah, not every broker has dollar against Turkish lira. The thing is here, guys, you can see almost in real time here how the Turkish lira is devaluing against the US dollar. And I know some people like to still buy the Turkish lira because the interest rate is very high. You're not going to hear the answer to the giveaway question. You have to find out the answer to the giveaway question yourself. It's a trading related question, so you need to research it yourself. So yeah, put in some effort. You can win here something very valuable, high stakes evaluation account. So a little bit of effort, and the question you'll see if you click into the link in the description of this live stream where you can register for the giveaway. So yeah, it's something I don't touch. I know some traders have touched this because they said like, oh, it's so nice, I'm getting like an insane amount of interest rate for my Turkish lira. Let me quickly check Turkey interest rate right now. It's at 46%, the interest rate in Turkey. So that basically means, if you buy the Turkish lira, you get 46% in yearly interest rate. If you do that against the US dollar, you pay 4.5% in interest rate. So sounds good on the paper, you earn 40%. But the thing is that if we look at how is the development, for example, this year alone, the Turkish lira has already lost 13.4% in value. And if we look how the performance was the last year, so let's, for example, look here 2023 until end of 2024, it lost 59%. So it doesn't really make sense for you, to earn like 46 or 40% in interest rate if the currency you're holding loses 59% in value against the currency that you are owing, not owning, owing. And so it's extremely difficult to trade this. It's something I wouldn't do, especially if you are a beginner trader. If you're a beginner trader, you want to get in trading, stick to the major pair. Stick to something like euro dollar. Stick to something like cable, so pound sterling dollar. Stick to something like dollar yen. So yen dominated pairs, dollar dominated pairs, major pairs, maybe also excuse me, pairs out of the second row. So I mean, Aussie is not really second row. That's also like a major, but New Zealand dollar, Singapore dollar, something like this. This is going to make you happy. I can promise you, if you try, for example, and I know most traders, beginner traders would do that, would try to short dollar versus the Turkish lira, there's a high chance you're going to lose your account, or you're going to end up losing at least a lot of money in that trade. So do me a favor, don't do that. Yeah, Henry is saying it here. Click on the giveaway link. There's a question written in bold letters. And the answer to this question is on the $5ers website under hyper growth. So it's basically like 2 or 3 clicks you need to do. And then you can find out the answer to that question for yourself. Should be easy now with a guide of Henry. I see we have somebody joining us in the background. I see Mike in the background, and I see LJ in the background. And if you guys are ready to join, anytime you can hop on. My voice is already getting calls from all the talking about trading here. Oh, I don't want, I suppose. Well, what do you have? No, I'm not a swing trader. I'm a long-term investor, usually for 3 to 5 years. But I have been trying, or I should say that is at least true for legacy asset, for cryptocurrencies. I'm also short-term trading. And I've been getting more and more into short-term trading, scalping, day trading now as well for legacy assets, like, for example, gold or euro dollar. Man, you are one annoying person. I wanted to answer your question earlier, and then you didn't answer me. Such an annoying person. But anyway, good. Here we go. So let's have one more look here at DXY. What was the position of Anastasiia? Let's have one more look at gold. So I took a long position in gold earlier at 3,366. So this is where we are about right now. Let's see if that pattern continues. Something, by the way, I see quite often that we see after the kind of morning session in Europe, a reversal until the US session of the move. So people trying to fade away kind of these moves that we see there, which should then result in falling stock prices. So you're probably going to see a falling S&P 500, falling NASDAQ 500, if we see a continuation of gold rising now to, I don't know, let's say 75 or 80, or maybe even 3,400 today. Who knows? This is what time will tell us. I mean, this is why I have my trailing stop loss on there. Which starts 1.5% away, from the position. And then I just let it trail. And if the gold position runs to the upside, the stop is automatically going to trail into profit. And I don't work here anymore with fixed targets of what I think where the price can go. From everything I've done for at least my trading strategy in backtesting is telling me that working with a trailing stop loss long term is much more profitable. Now, that doesn't saying, of course, that like some trades would have benefited from working with a fixed take profit, for example, using a fixed risk reward ratio already on the trade when it comes at least to the profits. But if I look at the execution of over 500 trades, the trailing stop has the best risk adjusted returns. Doesn't necessarily mean that it has the highest success rate, has a lower success rate than the fixed take profit, but it has the best risk-adjusted returns, which is something I look at. I rather have a sharp ratio of a high sharp ratio than a high success rate. Okay. I just read the message. All right. Good, guys. That's it for me today. After a small break and a small intro, I'm going to hand over to Mike and LJ. I hope you had some fun with Anastasiia and me this morning. We're going to see each other again next Wednesday, at least for an hour. So it was fun with you again. Remember to enter the giveaway. Remember to like the stream and do all the beautiful stuff. And I'll leave you in the competent hands of Mike and LJ. Take care, everybody. Bye-bye.
Thank you. Ooh, I was going to say thank you, Dirk. There we go. That's better. Thank you, Dirk. Great, as always, to have him and Anastasiia in with us. And always a delight to see their analysis and how they are making millions from the markets.
Indeed.
Guys, how are we all doing? Hope everyone is well.
How are we doing, guys? Hello, yes.
I hope you're all enjoying the fun and frolics of the market this fine Monday morning. What a week we've got ahead of us. Giveaways all week. While the cat's away, the mice will play, as they say. So Jonathan's gone, and we're doing a giveaway. LJ's cat is still there, but Jonathan's gone, so we're doing a week of giveaways, guys. So yeah, as the guys have been saying, head on over to the pinned comment. In the chat, you've got a link there. You've got to answer the question. Once you answer the question, it's a multiple choice. Just copy and paste the answer that you believe to be correct, and that will allow you to enter one entry for today's giveaway. And then there will be multiple other ways that you can have more entries as well. All of the draws, all of the prizes are going to be given away on Thursday afternoon. So make sure you're joining us for that, and we will be doing all of the giveaways across Monday, Tuesday, Wednesday, and Thursday. They will be culminating in a massive draw for all of the winners on Thursday afternoon. So so yeah, there's a nice start to the week, I think, guys. I think it's fair to say.
And we're coming up on 75,000 subs.
I know,
so
exactly.
Definitely punch that subscribe button as well, guys, because I think there's like a double bubble giveaway if we hit that as well. So there you go.
Exactly. I can't help but feel as though, you know, the numbers have really gone up since you and I have been on stream. I feel as though, you know, it's the AlphaBeta Lab influence that has really kind of just taken hold on things, you know. So yeah, so guys, let us know what you're trading, what is happening in the chat as well. Let's have a look. Who have we got in the chat? We've got Amal, we've got Kumza, we've got Rohit, we've got Manish, we've got Cam, Raf, Louis, all of the legendary regulars. Great to see you all, guys, and great to have you with us. So yeah, so guys, I mean, you know, that's probably the big news. I would say I don't think there's anything else happening in the world right now other than You know, the 5, 10, the
not a thing,
5,
dude.
10K accounts, the 5, 10K accounts, high stakes accounts. That's really the big news, right? So everything else doesn't matter. So yeah. Giveaway? What giveaway? Lyrics is asking. If you check the description, Lyrics, you will find the details in the giveaway. So check the pinned comment and follow along. The giveaway, the actual draw, will take place on Thursday afternoon. All of the draws from the whole week will take place on Thursday. So you have multiple chances to enter. We have got 5, 10K high stakes accounts being given away on Thursday afternoon. Every day there is going to be a question that you need to answer that question, that gets you an entry, and then there'll be a bunch of other things you need to do that will also get you entries. So so plenty of opportunities for you guys to get in on this and hopefully win yourselves a 10K high stakes account. LJ, we were talking about EJ, Euro JPY earlier on, and I have got to admit that it is doing my head in this morning. I mean, I just want to show. I mean, just
I think Johnny Boy was bringing up pound yen as well, saying just that. So yeah.
I mean, it does really look good for reversals, but it hasn't stopped. It's just not stopping at any point right now. I'm not too happy with EJ at the moment. We can look at GJ. GJ looks nicer, I've got to admit. But the only thing about GJ is it started with this perfect double top. And you know me, I don't like a double top because double tops for me are major liquidity to be hunted down. So I think GJ actually has a bit more legs in it to go higher possibly. Not saying it will, but it certainly could do. If it is going to pull back down, I don't think it's going to be for very long. I think this is going to be very much an intraday sell short term before we then see further longs coming in, I think. Because if we're starting with something like that, that's a very, very weak high for me, suggesting that they want to come back and retest that level. So yeah, but what do you think?
I think it's just lagging. We had a very small spike on the pound data earlier. Say for instance, if you consider pound dollar, and then after that obviously came off. So it looks like the majority driver today is definitely that dollar component. So per EJ, per GJ, we're still seeing dollar yen itself continue to run up. So maybe if you jump over to dollar yen, you'll see we're now heading up towards that 148, which I think we spoke about earlier in during the ABL session as well, looking to sort of see dollar yen potentially top out first to really give the lead to the rest of the complex. And I think that's probably what we're waiting on now to find the sells in the other cross pairs as well. So certainly taking the charge up now. I wasn't sure if we get at least a pause point or like a stall point around that 147.50 to 60 kind of area, but we've just powered on. So I think we're going the distance.
It does seem it does seem that way, doesn't it? Yeah, I mean, if you look at the 15-minute on UJ, we've had this nice engulfing to the upside, broken this bearish one that we had. It looks like it doesn't want to stop right now. So yeah, I mean, if we take it out to the daily, we can see that we do have this liquidity area here, which we were talking about before. So yeah, I got to admit, I didn't expect us to go that hard, that strong. But then, given the news over the weekend, then it's to be expected, I guess, with more volatility overall in the markets. I think we will. I mean, I was somewhat disappointed with the lack of volatility from the likes of gold and oil overnight during Asia session, but it seems like the volatility is now starting to creep in. We've had that PMI news come out. We've got the PMI coming for the USD later on this afternoon. So it feels as though there's a little bit of volatility coming in in anticipation for that later on this afternoon. So so that could also be something. Maybe, I mean, would I see a big wick coming here?
I think we will fail getting up towards here. I mean, like we've talked about a number of times, I think Dirk was touching on earlier with Anastasiia as well, that we still do have the broader theme of the dollar being very much on the sell side, right? So any of these moves seem very corrective and sort of near-term around near-term relevant goings-ons, whether that be the actual data itself, macro data, or the headlines that we're seeing at the minute. So, but they tend to be short-term rotations and short-term shifts for either intraday or a couple of days throughout the week. But definitely the larger picture is still a more downside for the dollar in totality. So I think again we're sort of playing out a number of the defined ranges that we've got here now. So hence dollar yen up to that 148.40 kind of area was that prior top that we really came off from. We'll see how much distance we get up around this 148. I think the air will start to become very thin and people will somewhat lean on that sell side button again. Obviously for today, it makes sense. I would have thought we'd see a bit more of a pause coming through mid London before running up, just like we spoke about, where you might then get a small dip in euro yen and pound yen. We did have a small dip, to be fair. I mean, it pulled back to
197.
Only a tiny bit, It depends what time frame you're scalping, but you still could have picked up like 20 points or so, right? Which is still not bad as far as intraday. But yeah, it looks as though we want to complete those moves first before delving any further. Dollar index on that same measure is coming up to a bit of resistance now as well, right? So I think that is very much just the play that we're going for to find some better levels to short from, etc.
Yeah, it does. I mean, I just had pound yen up there. With that high being a perfect equal high, it feels very weak. I would probably start looking at for pound yen sells maybe just this little bit higher. If we look at it on the 4 hour, for example, that was hardly a strong wick rejection on the 4 hour. And I'd want to see much more of a wick rejection on that to say, yeah, okay, we're going to start selling. If we look, the move itself started with a very impulsive wickless candle. So I do believe that there are going to be sellers coming in to come and retest these highs, this previous resistance zone. But I can't see us slowing down right now. It just doesn't look like it wants to,
Given how we've driven, as far as all the yen pairs, I would probably have a preference to short dollar yen, seeing that first and foremost seems to be now kind of the primary driver to the larger yen complex for today. And then obviously dollar yen, as far as the basket, does have that technical fundamental reason as to why it keeps getting sold off. And we've seen that when looking at cross-comparing each of the yen cross pairs altogether. We've seen all the other pairs in very much, an uptrend, rising, continuing to move back up, whilst the dollar yen itself has often ended up weaker. So even if you take your consideration of using the strength meter for the larger pairs, if we look at a strength meter within the yen pairs themselves, right? I think dollar yen therefore would be probably the optimal one to short at the minute, just because of that. Only for the same reasons that you're talking about here, that probably would have liked to see pound yen or euro yen trading just a little bit differently to how they are now. I feel like it injects slightly more skepticism as to just how much we pause and then come off. Whereas I think dollar yen could come off a bit further and continue down, whilst the other guys sort of hold a bit of strength, particularly if then that does shift the euro dollar, pound dollar, Aussie dollar, all that kind of thing to start moving up. Their cross component tends to elevate the yen crosses as well, slightly more than say dollar yen.
So, exactly. Exactly. I mean, euro yen and dollar yen are both, apart from the euro NZD, are the top gainers so far today. So they are, you know, I mean, they're close to a 1% gain. Now, on Forex terms, 1% gain is a lot, right?
Oh, yeah.
So yeah.
For majors,
Lyrics,
definitely.
Lyrics will put you in timeout. The answers and the questions can all be found on the 5ers website. Do your homework, go check the website, and you can find all the details to the question there. So yeah. On the flip side, what we're seeing elsewhere in terms of the biggest losers is, again, New Zealand dollar. Now, New Zealand dollar losing the most strength against the USD, but also against CHF and CAD. So, I mean, maybe there's an opportunity with New Zealand dollar today. I haven't looked at it. I don't tend to look at it because of the ATR and things like that on it. On the 4 hour, it is coming down to this nice little area here, and it has sold off quite heavily. It's got to be said. Could be coming to a nice little area of support.
Yeah, often another good way to play. I think when you see the differential between Aussie dollar, New Zealand dollar, that kind of thing, is just literally trade the AUD NZ pair as well, because that's coming up to a nice level and looks as though we are trying to break a recent high. So that would be a possibility there. At the moment, they have been in somewhat similar boat as far as macro picture rates, the larger spectrum of things going on. So hence you can see, obviously, we sort of trade in that kind of tighter range, sort of consolidation range for those periods. But you can see at the head we are now, it looks as though we might want to go to the higher top of the range there around 109. So it's also not a bad idea.
Yeah. But going back to Johnny's question with regards to pound yen, I mean, as I say, at the moment, it doesn't. I mean, euro yen seems to have stalled somewhat, and it looks like we're on the 1 minute. We're kind of in this upward channel at the moment, slowly creating higher highs and higher lows. As I say, this high for me is a weak high, so I still believe that this is going to be an area that price is going to want to take. So I probably would be holding off now on the sells for that. The same for euro yen. Euro yen, as you can see here, it's kind of just decided to bounce in this area for a while. Again, it actually has a triple top here at the top. So again, waiting for euro yen to show any real kind of signs or strength of what it wants to do for the rest of the day. We did have a question from Anik as well with regards to Euro USD. So we'll pull up Euro USD. Euro USD. I have a pending order, so I'm just gonna hide that because it's obviously not there yet. We'll hide that one there as well. But Euro USD again come down quite significantly. As you can see on the 1 hour, we've come down from a bit of a spike overnight, and we're pulling down now. It's taken this layer of liquidity that I just marked out, but it is still pushing lower. And if we look at that 15-minute candle, that's really our arena right now. This area here and this area here, those are our arenas. So really, you want to wait and see. Do you see a setup of something bouncing off here, or something bouncing off here? Those are the two that I'd be looking at right now. If you're talking about the lower time frames, if you're looking at the higher time frames, you know, we're all generally expecting to short the dollar, right? The question is, when do you short the dollar, right? Yeah. You know, the reality is that, you know, there are so many different factors at play here when it comes to the macroeconomics of the world economy, not even just the US economy, right? So I'm personally, I wouldn't want to call it, if I'm honest.
Yeah, I think it's really that 114.50 level just here. As the clinch point, because so it's going to be seeing if we can continue to hold the test of that level just here. We had a slight dip through it, but only for a period of 20 minutes or something, right? And then we're right back up. So that, like, if we break that, then it looks pretty swift down to about 113.80, 114 round number. Pretty simple. So I think that's definitely the question. I think the thing is looking at, in order for that to really happen, we're seeing dollar yen come up to that 148.40 level. And from there, question whether it can actually run further from there, right? So it may then tumble. Euro dollar could come a little bit further through here in almost like somewhat of a fake out type move, just as dollar yen completes its move higher. And then very swiftly, as we've seen a number of times, euro dollar turns around, everything turns back up, and we keep going higher. That would be my suspicion. I would not, like you're saying, I would not be wanting to bet on a move down towards 114 or so. As far as the chart in and of itself alone, at the moment, that looks very sensible. But when you take everything in totality with the other components that have those cross flows, I would not say it's a
it's a certainty.
Recommended consideration. So,
I mean, I'm looking at it right now, and you can see it has tried to push on higher from this area. And we've tried, for example, in this 4-hour candle that we had on Friday afternoon, really tried to push on higher and go for these areas. Couldn't do it. Immediately, basically got broken down because of events over the weekend. I think, there's this kind of weird kind of reaction to what happened over the weekend, to the sense that we were talking about it earlier on ABL, how the markets have tended to be a little bit more, what's the word?
Sanguine,
less volatile to what is happening around the world right now. Okay, and it's almost as if there is so much going on, there is so much happening that there's too much to try and push things around. I think you said it yourself that the numbers are going to really be what's pushing things, rather than hyperbole and posts from Trump on Truth Social and all that sort of stuff. The market seems to have really understood that, okay, he says one thing and does something else. You can't position yourself in a financial market based on somebody who ums and ahs and
pure
changes.
Speculation.
Yeah, exactly.
Now you've got like derivatives of speculation on speculation on right? And then obviously, if you think about that in a probability standpoint, then you're gone, right?
Exactly.
Compounds. So
exactly that.
So that's what I call the markets very sanguine at the moment. In part from just oversaturation of these kind of events going on, that at some point you go like, okay, well, balance of probability, you try to stack it all together, and you can't, there's no edge per se to be made from the combination of events. So therefore, your best op is to kind of try and look through them and expect that ultimately they will be, sorted out. I mean, depending how long you've been around in markets, you will know that does tend to be what happens. There's always something going on, some chaos, some freak out, some whatever. End of the day, world keeps spinning. And I think that's very much where we are at the minute, that people are kind of going back to.
Absolutely.
Yeah, DJ did have this question as well, which I was just waiting to get to. So because that's very much sort of along the lines of what we're talking about, DJ. You're very correct. So does it always drive DXY lower? Not always, but it's always on a relative basis, right? So when you've got, like, say, multiple central banks all cutting at the same time, it'll be the relative basis between who is cutting more aggressively. The thing in this circumstance where we are now is that the Fed hasn't really cut very far at all. Every other major developed country has cut earlier, sooner, and more consistently than the US. The US is kept rates quite high. We had, the one or two off-spurt, one-off cuts, like we had that 50 basis point cut back in the late tail end of last year, which ultimately the Fed was pretty up in the air about wanting to do themselves, but the market ended up pricing it in and expecting them. And then so the Fed also doesn't want to kick up a fuss and upset market positioning, that kind of thing, because that creates a cascade of all sorts of other problems for them to deal with. So very much at the moment, per what you're saying right now, once they do start to fully signal that they are going to cut rates, that will be the death knell for the dollar at the moment. We can clearly see from the index, from the positioning of euro dollar, the recent trading range and that sort of thing from dollar yen, we're very much on that crux. And it's just a question of pushing it over the cliff, per se, right? Now, the counterbalancing of that at the moment, we have had reasonable US data, whilst it is slightly coming off, and you've had the labor market still being relatively strong, right? It has been surprisingly strong for the past while, but now it is starting to just gradually dwindle off. So at some point, the Fed will have to switch and jump over to that. Now, the other thing with the Fed, they're notorious for being late or behind the curve, right? As it's always spoken about. So similarly, right now, we're getting a number of them still commenting that like, oh, rates should be higher. We've got a very split sort of portion between Fed participants of some think like, no, we're probably moving towards more easing. Others go like, no, we really need to hold it and keep it high for a bit. At some point, they'll capitulate and have to then just bring it down. And that's when the floodgates will just open. So the only reason the dollar hasn't just fully collapsed right now is because of that component. So, and then with what you said as far as supply side mechanisms, investments, that kind of thing, if you're talking about positioning from like larger funds, hedge funds, institutions, banks, and that kind of stuff, then yes, they will have to start shifting on that quite quickly. But we don't seem to be there just yet. There's still a few question marks in the air from the Fed around the eventual outcome of tariffs and that sort of thing. And then obviously we've got a bunch of the other chaos going on right now, which has forward implications for like energy input prices and that sort of thing as well. So
yeah, absolutely. Quite a few of you asking for us to look at gold. So gold, we're basically still trading in the arena that was created off the back of the news. We were both talking last week about sells on gold. I don't think anything has changed that sentiment for me. I don't know about you, but I still see sells more dominant. We're coming into a nice area right now where I could see us actually come into sells. I'd like to see us tap into this little pocket just here. We're struggling to push on. That 1 hour candle that we just had closed was an inside bar. So that would have been a nice area to look for targeting. It obviously pushed up, took the high, and it's left the low behind. So I'm still short on gold. I'm just not sure it's necessarily there just yet. But as you know, I like to go for the ridiculously tight stop losses and big risk to reward. So that is why I'm not ready to necessarily sell it. Some others might be looking to sell right now. They might see an opportunity already. I'm not sure it's there yet. But maybe you're seeing something that I don't, LJ.
No, I'm seeing about the same. I think for us to really kick on and make new ground, that would have been my base case, say prior to the past, what we've observed over the past 2 weeks, say. Once we had that run up to about 34.40 again, after sort of consolidating this higher 30, say call it 3,200 to 3,500 range, we saw that push and it was looking quite healthy and as though we might then get an established further run. I would say, given everything going on, you have further cannon fodder for that to have worked out and to have continued, but we haven't seen that really kick on. And so, as I always say, when you see price acting in a certain way, despite having every reason to push on in a certain manner, and it doesn't, is often very telling. So I'd say the fact that we sort of peaked out there, and then, this past week and a half, we've really been quite lackluster to kick on anywhere. That said, obviously it hasn't fallen out of bed, but you would say the reason it hasn't fallen out of bed is because we have all those things going on. So my base case for now would be a bit more downside for gold. I don't necessarily think we're going to obviously just collapse or something, or like it's dead. I think just we might be in this kind of more shorter range and kind of stuck in this above 3K to 3.5 level for maybe a more extended period. Whereas people might have expected that we might be able to get out of here over the next 3 months and then push on to the 3,700. I think over the next 3 months now, we could be still kind of stuck in this area for the near term. So
yeah,
I'd say, yeah, agree.
I can see some of you guys commenting about the giveaway. As a quick overview for those of you just joining, yes, the 5ers are doing a giveaway all week. So every day this week, we will have a question with a link that is asked for you guys to answer the question. The question is going to be a question about the 5ers. All you need to do is answer that question. That will be the code for you to get in on one of the giveaways. We're going to be giving away 5 accounts. All of them are going to be done on Thursday after we close the ABL session. So our weekly ABL podcast. So it will be at least after midday UK time. That is when all of the forms, all of the submissions will close. So if you want to get in, make sure you are joining us every single day. You've got multiple ways of entries, and all 5 accounts, the draws for those accounts will be taking place on Thursday afternoon. Every single day, there are going to be opportunities for you to get in on the giveaways and to have entries multiple for each of the draws. Okay, so click the link, follow the instructions. The questions are there. All you got to do is copy the multiple choice question, the correct answer, and that will be the secret code to get you in. And then you will see alternative ways for you to have entries into the prize draws. In addition to that, we are also here on the 5ers. We are at just under 75,000 subscribers. So if you guys can get us up to 75,000 this week whilst Jonathan is away, he has promised wild and crazy celebrations. LJ and I know Jonathan, and we know that he doesn't
hold back. He gets very excited and just goes overboard.
Exactly.
Goes overboard.
So if Jonathan is promising wild and crazy celebrations, then you better believe it. This is not going to be hyperbole. So if you haven't already subscribed to the channel, make sure you subscribe. We are live Monday, Tuesday, Wednesday, and Thursday every day throughout the London and just as we go into the New York session. So make sure you're following us for that. And yeah, I mean, gold right now, I've got to say, I kind of like it for sells right now. I'm waiting to see what it does on the 1 minute, but just that nice long wick on the 1 minute is tempting. It is tempting.
Yeah,
I'm
waiting
waiting to see the setup.
Yeah. That, and of course the big wick on the 1 hour and the 4 hour that we had earlier today after obviously the open, the drive higher, and then just absolutely folded in on itself, right? So
yeah,
we've pushed back up. We're basically sort of around that close / open level from last Friday and then to this morning. So this is definitely where, if you were considering certain things, this would start to get reasonable.
I mean, we're if we're looking at a break and retest, so we've broken this structure here. We haven't broken these lows. That's the slight caveat, is that we are still within the wider structure, but we did break structure. If you were looking for sells, we're at a really nice 50% level on the fibs, so it does look decent. I know some people though who would have drawn it there, which also gives added confluence, because the move down, depending on what time frame you're looking at, you could argue, well, the move down only actually started here. But if you went to the 1 minute, you would argue that it actually started at the very, very top. So, so yeah, it depends on where you draw your fibs. But either way, it does look good for sells at this moment in time. I would still be waiting for my my kind of confirmation of sells to come in, which I'm not seeing just yet. But it could be on its way. It could be on its way right now. This wick rejection on the 1 minute right now could be the start of that move. It's come into a wider zone on the, I think it's on the daily time frame as well as on the hourly. So it's showing some possibility there. So we'll see.
Definitely, I think when you go out to the daily, you can see that gold looks quite neutral where we are, right? So I think the entire next direction for it, just like you were saying, it's sort of there is a degree of 50-50 at the moment. It will definitely very much be played out in those shorter time frames right now. So I think that's definitely where you want to look for gold. I would not be confident just yet on like larger swing trades as a whole, just at the minute.
Yeah. We've got Andy B telling us to draw out a trend line from his surfboard by the looks of things.
I believe I know he's talking about the trend line he's talking about.
I'm assuming we're talking about this trend line here, which is, well, I suppose this one, which, I
think you'd be saying from the top side potentially. So that recent high that you've got there, down through as we've kind of wandered down. But if you exclude today's price action, you can see how it's like it's pulled back into that and then use that as a springboard to come back up again, right? So I believe that's what he'd be talking about.
I would agree. The only thing is that I'm looking at it from what did we take in this move, and we took a significant amount of major liquidity on this wick, which is why we wicked back down. There's no reason why it may not do that. My bias is still for sells. Not yet. I'm not seeing the setup, but that's what I'm kind of observing, looking at the structure that I've got in front of me. But could well be, Andy.
I think it's definitely a good point as far as like intraday stuff. And then seeing as we got back above that on the Friday, right, and then sort of managed to close above it. Come today, spiked up, come down, tested again. So as far as intraday moves, that would be sort of some of your points that you could be looking at to, reverse the move, right, from the highs down here, see if you get a retest, potentially enter again long intraday. The question is, once we start getting up here, given obviously you can see all the price action through that last half of the week, which is while all of this was going on, et cetera, right? And we've also had the Fed kind of indicating that, yes, somewhat we're towards bringing rates down, but not really. It's going to be a bit longer yet. And so every other period that we've run through the past while, whilst they're still up with that, and because then this has the further implications to the whole debt profile of the US, gold has further continued to benefit from that aspect, as well as the other broader geopolitics and all that kind of stuff that we've had. So you just have to recognize that at the same time, it's telling that the price action last week was the way it was, right? So it might similarly to how the market as a whole has started to forget about all of these headlines and stuff. Gold itself might also seem to be starting to get a bit saturated with much of these headlines. And if you look at the relative price movement over the past couple of years now, it is pretty fire, right? It's huge. It's massive. To the point where it's now, if you look on a 2-decade, 3-decade basis, it's outperformed the stock market altogether. Right. Which, just before we were saying, everyone's like, oh, gold's dead, silly asset, no non-interest bearing, doesn't go anywhere, right? It's dead. Who cares about it? Buy stocks. and then stuff flips. So it's up around these levels. Eventually, you do have to start going. Naturally, how many people are going to? Because you have to start going. Okay, what's the probability that we go up $300 on gold? Right, when you're looking at like big money coming in that will actually shift price. Okay, so, or is it probably relatively more likely that we could go back to 3,100? And if I just had to conceptualize that right here, 3,700 or 3,100, you would probably have the lean towards 3,100. So then you would play that out and go, okay, now consider buying at 3,100, because down a further 300 is 2,800. What's the probability we could go back to 34? Probably higher that you go to 34. And then you've got the possibility of going to 37.
Exactly.
Right. So then it's all about the where you get in, relative pricing, that kind of thing. Because as much as there's the notion to the general populace or retail traders, where they say like, oh, don't worry about when you buy or trying to time the markets or whatever. That's good general advice because people are not experienced. Anyone with experience knows that no, you make all of your money by buying at the right time. Right, whether it's a financial crisis and you buy on the bottom and get the crash, etc.
Precisely.
That's the professional's game versus general advice.
Exactly. So, the degenerate game, which I am a cheerleader for. You were talking about gold, so just as this is a very rough graph here, but you've got the graph here going back to August 99, right? You've gone up 1,293%, right, in 25 years. That tells you.
It's huge.
That tells you what you need to know. You're not going to get that in any other asset.
The only other one you've really got is Bitcoin and crypto, which is hence part of the reason why it's been so popular and so voiced, because people like you can't get these kind of returns anywhere else, right? And so obviously, difference is gold is an extremely mature asset, arguably the most mature asset in existence, right? So it does have a bit. It is a bit more subject to gravity per se, right? So it just has to be taken into account.
I am personally, I know a lot of you guys are saying buys. A lot of you are saying up to 3,400. There is certainly a level up there. For me, this 4-hour candle that we had today, this one here, just says no. This one says we're looking at sells. The way it reacted off this one here, it couldn't take this high, and it took a lot of levels in the meantime. You look at this wick, or sorry, not even this wick, but this this candle here, right? Look at all the price action that it took out, excluding this one. So it's gone basically from Thursday. It took basically all of Thursday and a large chunk of Friday's price action out in one candle. That's where the markets are using the news as a catalyst to get themselves into better positions, and find levels that they're comfortable at, whether it be for sells or for buys. That's at least my perception on it at the moment.
I definitely reckon you could get 3,400.
I think you could, but
it's one of those things.
Standpoint, it's going to hold here. I think that's just my view.
Yeah, exactly. I would be seeing that as a whole point. So I'd prefer to enter short at 3,400 than like trying to chance going long here for the possibility of making the 3,400, right? So
absolutely.
Hence, it's all about your one, risk reward for the trade, and then two, people often forget is the probability that you, at least your own subjective perception of the probability of success of the trade. So that's how you get your ratio worked out. So risk reward multiplied by perceived probability of success.
Exactly that. Other area that looks quite nice is this one here. So I've got two areas marked out. You've got a level of liquidity here at 380.62. The other one for me is 377.52 to 378.60. Could also see a nice little reaction in there. So I'll be keeping an eye on that on the 1 minute just to see how that plays out. I've got it open here on my MT5. So just waiting to see what kind of reaction we get on there. Just want to catch up with chat. I did see Jonathan
catch up.
was
Sorry,
asking
guys.
about asking about gold, and my apologies. Actually, we do have. I did see this earlier. American Eagle Boston asking about the Dow Jones. The Dow for me, I did have a look at it. It looks like it's a sell for me at the moment.
There was that and a few questions on NASDAQ as well. Yeah, so they're all kind of in the same boat, right? So
they are. It's all that same basket. Got to say, it looks like sells to me across the board on all of those. I don't know about you, LJ, but the only thing is that we're kind of. I mean, how far is it going to go? Is debatable. You're kind of halfway through, so you're not going to get a massive risk to reward if you were just going to do a safe trade, right? You stick your stops here, and you'd probably stick your take profit here, maybe dipping into this. So you're not even going to get a 1R right now. So I would probably be sitting on my hands when it comes to those. I think Akram said it well, waiting for Trump to get his coffee in New York to wake up and see how prices react and have a sense of what happened in the weekend and how to price it. And I think that's spot on. You know, where we are right now, we're going to be coming into New York Open. That seems like a sensible approach, especially for the indices.
Yeah, I think we spoke about in ABL at the time. Like, we had a rather aggressive and continuous push higher on indices and looking quite bullish. But it's always that question of then, especially that's through Asia and London. Once you start to approach US session, you often see these things kind of unwound or reverse, or that's really the test to see if price is actually confirmed and agreed on at this kind of level. And per the past, 3 hours, we've now seen it come off pretty sizably. And the failure to really keep up there and sort of drive towards that 21,800 again, I think is pretty telling now. So I would probably see a bit more downside in the indices in general. I think this is not a bad thing. That's probably healthy for price action where we are now. I think if you saw just a continued kind of blind reaction despite everything going on, for us to continue and push to all-time highs and then try and have an attempt at that, I think that would have then been seen with a lot of skepticism, ultimately from a market behavioral standpoint, right? So I think having a bit of a pullback here would be healthy for the overall larger trend, and you might see a bit of a reload once we do get down to some reasonable entry levels a bit lower. So per now, I think I definitely see downside on the NAS indices in general. I think Anastasiia was also saying the same thing. I think we both echoed that last week as well. It was really that test where we had that kind of blow off beyond that 21,800. We got capped at about 21,900 or so on the NASDAQ, for instance, and then just fell right off after that. I think that was around sort of just post-Fed, right? So given that, probably a bit more downside overall.
Yeah, absolutely. Just looking at gold at the moment, gold has made a further pump in the last couple of minutes, heading up to that 380 level.
It's definitely on a charge just now.
It is. I was looking at an area here for sells, but it's broken past this on the 1 minute, leading me to believe that we are still going to go higher. We've got all these different clusters of liquidity, major liquidity up here. So, I mean, ultimately, if we break all of this, then yes, that what everyone's saying about 340 certainly looks reasonable, and a viable option. I think I would be waiting for us to retest this area here. This kind of 384 is that next kind of peak, if you like, in this area here.
3,386 is what I have lined out, so it's about similar. And so I think it'll be a question similar to how we saw dollar yen as well running up, right? But again, we've kind of stalled out at that 148, where it looks like you're going to make a full run for 148.40 in that kind of double top. I think it'll be a question for today whether that momentum starts to stall out slightly early. Very common occurrence, being in markets for long enough, you see the run and then it gets killed early, and you're like, oh,
Yeah.
right. So
Yeah,
I wouldn't be surprised if
absolutely.
that's what we get.
Absolutely.
I mean,
absolutely.
particularly this past while, that's been such an impulsive drive. I mean, this is also other point to consider is obviously this is gold, not some of the other currency pairs, and gold does have its own temperament, put it that way, right? So
I mean, gold looks very tempting on that 5-minute candle right now to sell. I can see some of you saying gold will sell now. Stop using certainties. It's not a certainty.
yeah, I'm leaning on selling from further highs at this point.
Somebody's saying I'm already in sells. I would be very, 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 very careful, because gold is notorious for making lovely, nice big wicks, and those great big wicks catch so many people out. I've been caught out more times than I care to remember by those lovely wicks. So be very, very careful on that. The 5ers provides real-time trading insights on gold, NASDAQ, and Euro USD. Their live sessions are packed with expert analysis, looking to take my trading to the next level. Rudro, glad to hear it. Ratan, I'm not sure what you're referring to, as in where are the questions. If you're talking about the giveaway, click the link that is pinned to the chat, or click the link that is in the description, and you will find all the details there. All you have to do is click the link, answer the question, and that will unlock your opportunity to get into today's draw. All of the prizes are going to be drawn on Thursday afternoon. So Thursday after midday UK time, we will be drawing all of the prizes for all of the giveaways throughout this week. We will be giving away 5 10K high stakes accounts each and every day. Every day you answer a question, that will unlock opportunities for you to get more entries on those as well. So make sure to check it out and get yourself in with a chance of winning. Johnny's asking us to have a look at silver. I was looking at silver earlier, and silver just didn't seem as convincing to me as gold. I don't know. Have you?
Yeah, I haven't liked silver for quite a long time myself now. It always moves. It seems to each month going forth, say the past year and a half or so, 2 years, it seems to move much more and more janky all the time. I think I find it very good for swing trades when you catch some of these real like extensions of price in terms of like an ATR, if you want to think it in like a standard deviation or sigma, right? But intraday, I hate it. It's I don't like it at all personally.
I once had about an hour of beautiful trades on silver. This was late last year, and then silver humbled me like only the markets can humble you. And since then, I've decided no, maybe not. Silver's not.
It does even more crazy stuff than gold often.
It does.
And it won't even break. Like it doesn't even then continue on trading per like technical structure as well.
Yeah.
You know, and then there's no fundamental driver that's coherent with the move as well. So you're kind of like left in the dark. You also have the constant. I mean, just like there's always the fines and stuff coming out for banks manipulating gold prices. You know, we've had that for decades now. That's very much caught on to by this stage, etc. I wouldn't be surprised if they've moved to silver as their preferred. And I wouldn't be, you know, if we see stuff coming out later, one, it's, you know, far less liquid, all that kind of stuff. You're going to be able to manipulate and move these things.
Yeah,
you know,
absolutely.
Metals markets are very notorious for that kind of activity.
Yeah, exactly.
You just quick Google search, you'll find out just how common it is, right? So,
yeah. Exactly. Henry is saying the Dixie on the 15-minute. So let's have a look. Henry is always a wise one for keeping an eye on things. Not clear for me yet, Henry, if I'm honest.
As far as the DXY, give me 1/2 sec. I'll come back and then I do have some comments on DXY. So
Wow. There you go, guys. He's just going to leave us hanging with that one, isn't it? If ever you needed something to hang on to, it's LJ saying he's got some comments about the DXY, and then he's going to wander off. So yeah. We'll have a look at the Dixie then. Let's wait for him to come back. Let's go back to gold. Let's have a look at what gold is doing. Gold is still wicking off this little area here. I'm just not entirely convinced by it right now. I've got to say, I'm not convinced by it. The 5 minute is creating this inside bar at the moment. The 3 minutes, we haven't come and taken this high. I'd like to see us take this high before considering any sells. Those of you saying sells, I get it and I can see it, but I'm not there yet. I'm not there yet. I think if we are going to sell, then I would be looking for us to come and retest up at this area here from an ideal perspective. But I don't think it's going to hold. I think it could just be one of those nasty gold wicks. Right now, you've got a nice bullish engulfing candle to the upside. We'll see how that one closes on the 1 minute. Yeah, it doesn't look necessarily ready to sell just yet. So yeah, how much lots can here he is, he's back again. How many lots can banks hold for a month in gold, or they just trade and book? You've got to understand that the gold isn't necessarily it's not just necessarily traded in lots as a CFD, right? That's not how gold by the banks is necessarily traded. You've also got to take into account that you've got central banks that are also trading actual gold reserves, right?
Physical, so yeah, the underlying
physical gold, the underlying asset. So it doesn't necessarily work in the same way as we do as retail traders in CFD markets.
Just like oil. Yeah, because it's all commodity. There's an actual underlying real asset being exchanged, and that's what these prices are derived from, right? As far as the other as far as banks or something, or maybe if you're holding it in a portfolio, it's then going to depend whether you're running leverage, not running leverage. That's going to completely depend on the greater balance of portfolio construction, whether you're also holding some elements of other bonds or other correlated assets. There's a million ways that you could calculate and put this all together. I guess the base standard would be to take how most institutions, per their sort of fiduciary responsibilities, or what is considered acceptable per the norm as far as asset distribution per recent times. That would give you a slightly better indication. An example of that would be how the classic 60-40 portfolio, right? 60% stocks, 40% bonds. You can sit here and debate of just how rubbish that is, or whether it's a good idea, all this kind of stuff. A lot of all these things have come out of academia, and then in parts with that, institutions, that kind of stuff, tend to use that one as a selling thing, because then a huge amount of what they do is actually just getting clients. They're just trying to bring in capital and reap, percentage yield, per their cut for performance fees, that kind of stuff. And obviously there's so many players these days. Either you're going to try and outcompete, or you can just increase your assets under management up and up and up and up. And that tends to be the game these days. That's why you hear funds, particularly hedge funds and stuff, they tend to go for lower returns these days, but then lower also drawdown, which that's what clients want. But if you actually break it down and think about yourself as a client,
exactly,
you're basically just asking for less money, but still
exactly
a lot of risk, because the risk is often not computed correctly at all. So
exactly that.
Gone are the days of hedge funds kind of, running in your 30, 40, 50%, and this kind of being normal expectation, or those are the good players. Now, if you're running a 15% to 20% consistently or something, you're on steroids practically, right? And most hedge funds are either 8 to 10%, hardly outperforming the index, or they're just blowing up altogether.
Yeah,
and all of that is in part because they are so constricted that they can't move very well. And then when they do, they have to have some kind of reasoning as to why, because then that also gives them defense, from like there's all sorts of other parts, like the legal standpoint, right? If they can point to like, oh, well, this is what everyone else is doing and this is the standard accepted method, then if something goes wrong, they can point to that. So there's a lot more depth of understanding the inner workings and plumbings of the actual sort of business sense and business structure of just the larger game of finance as well, if you wanted to further understand that. So
exactly that. So Gold Digger, hopefully that answers your question. I saw you posted it twice, so I hope you're paying attention. If not, go back and watch it again with greater attention. Yasir, I've called these out in a few times, and I know some people think I'm daft for doing it, but using the words will and it will do this or it will do that, guys, if you see things like that, just be careful. Don't get caught in in fairness, Johnny, I feel you. I completely agree with you. It is really, really tempting to try and get in on those sells. But when you see comments like that in big bold capital letters saying this will happen, this will that, I've been in trading now for 2.5 years, so I know probably better than most to not listen to random comments from a chat. But it's amazing what the semantics can actually do to influence you when you are new to the industry and you're still trying to figure things out. Ken's asking, why are you trying to find a sell when gold keeps rising up? Why don't you find a base to buy? It's a good question, Ken. The reality is, at least from my perspective, if you look on the hourly, we have had this massive big move down and we've now come back into it. I don't think we're necessarily going to see massive moves today unless we see something seriously worrying in the PMI coming out from the US dollar.
Yeah, we've kind of already had the massive moves per se, right? You got to think of it in terms of the ATR, right? So you don't tend to just run away from price like everything unravels. And so if you've seen a relative move that is basically in line with the expected ATR, probabilistically you should expect that it will hold within that. And if you want evidence or data for that, just go. There's places you can go look at, whether it's euro, dollar, pound, gold, any asset, and look at the relative change every single day, and you can see just how in line they are every single day for years and years, for decades, right? So then you can quantify and calculate all this data and see the expected move. So once you are approaching the extensions of that again, then most likely, yes, you would start to look at reversing the move. Because you've already had the high move, right?
So my advice to anyone right now, when you're reading the chat and everything else, I mean, look, we're not giving you guys signals. We're not telling you what to trade. We're just simply saying what we can see and what we understand. LJ's been trading for 13 years, so LJ knows his stuff. But none of these are signals. None of these are financial advice. But again, it's like we are still bullish. Sweat and Style is still bullish, not us here in the 5ers, right? So guys, it's really important to understand, if you are going for this, is just to watch thanks, Raf.
On the private jet, remember, on the private jet, Raf.
Exactly. We're waiting for the private jet to take us home, because otherwise all you're doing is chasing what somebody else is telling you, right?
And it's going to depend what time frame as well, right, Mike?
Exactly.
Depends. Are you looking for something in the next 5-10 minutes, like a sort of scalp-esque type trade, or are you looking to play out till mid-US session right now? Because you could be looking at 4 hours or 15 minutes. Or the next 3 days, right?
So I mean, look, for all we know, Sweat and Style, right? He could be looking at a swing position from here, right? From like the 3,000 level, right? There's no there's no kind of context, and that's the one thing that I think really is most important for people to understand, is trade your strategy and trade your way. Don't go trying to get caught out. I did it when I first started trading. That's why I call it out, because I remember seeing people posting comments saying, "Oh, it's going up, it's going down," and then
you get influenced, and you're like, you
yeah,
start
and you
doubting,
get
you're like, is there something I missed, or like, what am I not seeing that
exactly.
they're seeing, and like, what, who, huh?
You get
And then
so
you've got like 6
confused.
Spider-Mans, or
Yeah,
that meme of Spider-Mans all pointing at each other, and then you're like, which is the correct idea?
exactly.
What am I doing? And then you just
It's
lose
like,
yourself
what was my
in
idea
the
again?
source.
What was it that I
Yeah,
thought?
yeah.
So it is really, really important that you guys kind of, just take your own ideas, for sure, look at these things and understand these things. But in the screen, on the screen right now, on the scroller, you'll see at the bottom, and I'll put it on the screen right now. You'll see there is a link to the AlphaBeta lab. Yeah, go and have a look at it. It's a community that we're building up. It's big plans coming in the future. So come check it out. But this is the kind of stuff that we're talking about. This is the kind of encouragement that we're trying to give to people. Whether you're a new trader, whether you're an experienced trader, it's by traders for traders. With that in mind, here's a quick teaser for you, and we'll be back right after this. There we go. Oh God,
Yes,
we love
sir.
that intro. We love that tune.
Yeah.
We do love that tune.
And yeah, so guys, yeah, we try run. That's why we run through like each of the timescales and try give like a holistic view of this is kind of what you might be looking at short term. This is sort of more intra-session for the day or whatever's remaining of the day, and then these might be some ideas for a multi-day type strategy or something like that, right? So we try cover run the thing and tell you what we're seeing, and then you can put that together with your own structure. Like you could have other open positions, for instance, right, which might be correlated, and then so it's gonna change completely your view purely because you have other correlated positions within the portfolio currently, and then that changes the full risk profile, right? So
yeah, exactly that. And Johnny, Johnny saying spot on. Sticking to your strategy, the best thing to do. I've lost a lot hearing noises and chats, especially like those adrenaline calls in the chat that say buy now. That's exactly the one that I'm talking about. That's exactly the thing I'm talking about. So yeah, and yeah, Henry's giving you an emoji version of the meme that we were talking about. So so yeah, and Akram, no worries at all, my friend. We will be picking you up on the way. No question at all.
Indeed.
But yeah, I mean, gold at the moment, one of the things we do like to do is we do try to trade live. But the reality is that it's not really presenting anything. We're kind of in that weird moment just before New York opens where everything kind of just starts to hold a little while.
We can have. Do you want to check Aussie dollar?
I do, but I do want to first show my misery at missing this whilst we were talking. This move on Euro JPY. Yeah, that is that's a hard one to take. I'm not going to lie, that is a hard one to take. That would have been a nice move down, but alas, it was not meant to be for me.
What you should do though is go look at 1 minute chart, Euro Yen. Look at when it started to fall.
Yeah.
Like sort of peaked and started coming off, right? So it's about to your right, about there.
This one.
What's like 5 past the current hour.
5 past.
Yeah,
the current hour. Yeah.
Then go to dollar yen.
Oh God, here we go. Now, what's interesting is it started with a double top, so I don't actually think this is the full move. In fairness, but let's look at dollar yen at the same time. Yeah. Came off at the same time.
It's like I was highlighting before, dollar yen seems to be the one running it, and so that's what capitulated the move.
Yeah.
So that's something for you guys to watch, is to watch the wider complex of the like similar kind of pairs, and you can often, if you bring them all up on charts individually, you can see which one is kind of front running everything else, right? And the others kind of join alongside with a lag. And then once you can define that, that's a really good strategy for the day. That then you can pick what is the leading driver, see when that starts to capitulate and give you that confirmation that's running off, and then the others all will as well. And then you can define per the structure of, say, other pairs, and then what might have more pips or better tops or bottoms or defined levels that you can then maximize the amount of distance that you're going to cover for the same combined move across the board.
Sweat and Style, what question? Literally all you said was, I do not expect any significant volatility for for gold until the market opens. What question? Oh, hang on, here we go. Why does the US session most times go opposite of the London and Asian sessions? Well, because a move can't carry on forever, right? It has to, you know, there's, as LJ was alluding to earlier, you've got an ATR, so you've got an average true range where price cannot just keep moving and moving and moving and moving. You have to have enough buyers to sell to, and you have to have enough sellers to buy to that would buy, right? So it can't just go indefinitely, and that's why you will always see a pullback. Sometimes you will see a continuation, but you're always going to see some kind of pullback because there's the ebbs and flows of all the transactions going on in the markets, right?
Yeah, exactly. And so a way, I think a good way of conceptualizing it is kind of like, imagine you're playing, say if we take like card games or something, right? You're playing like poker or something like that, and you've seen this card come out, this card come out, this card come out. You're gonna change your idea about what's the probability of seeing another one of these cards, because obviously it's because you've already seen a couple of them come out. So the same way in the market, when you've seen a move go X distance, what's the probability of that move going further X distance when you've already seen one of those cards or multiple of those cards revealed, right? So it's kind of like that. And as far as the trading element, when everyone's trying to compete back and forth, and that's what creates a market, you're going to be going, okay, probabilistically, I've already seen these cards revealed, so it's better for me to bet on the other side, right? So the same way, once you get the ATR extending to a certain level, a certain height, you've traveled here, traveled to there, probability says you'll probably come a little bit back further, right? And now often, if you've gone a full distance down, a full distance up, and you've met that kind of relative double top, your distance isn't going to be always all the way back down, because you have made there is some relative agreement that price has come all the way down, but now price is being agreed to be higher. So then you get kind of a half retracement back to sort of that midpoint. And, you also have to think, if you were the one holding the longs on the other side, at what point are you going to get out? You've seen it come all the way back up. You're going to be like, okay, this is just going to go to infinity. No, you're probably going to say, okay, this would be relatively sensible for me to pull back. Then the other people as well on the other side, considering selling it, knowing that these people are thinking about that, they will lean into expecting that people will start to pull back price. So it's all kind of a game theory thing, if you think of it that way, in terms of like economics and stuff.
Yeah. And sweat and psychological levels don't matter. It really, it's a psychological level for you. Doesn't mean it's a psychological level for the entire market. You've got to think about how many players there are in the market at any given time. If we're talking just Forex, we're talking about $7 trillion transacted every single day. Just because, even a fraction, a percentage, 10% of the market believes that that's a psychological level. The rest of the market doesn't agree. It's not going to get hit.
Yeah, and psychological levels are often then have relation to, say, things like options and that kind of stuff, right? And futures contracts, that kind of thing, where they tend to also be priced around certain bulk levels, just out of simplicity, right? Like, if you're going to charge someone something, do you probably round it up to just like the nearest dollar, or do you go like $1,537.66? No, you'd probably just be like 1,500 or 1,530 or something, right? It's also from simplicity's sake, as far as clearing houses, all this kind of thing, and that's how that's developed, because humans are just like, it's easier to put together, and then so you've had the eventuation of that. As far as not quite getting to a psychological level, you have to understand that there's buys and sells on both sides. And also, for instance, in the take options, you have market makers, right, which are then trying to shift price around themselves and either offload or unload the amount of contracts that they have to potentially theoretically deliver to those holders of certain options or whatnot, right? So then they're constantly in the market up and down. And if you learn about this stuff, that's often that's what is referred to as like gamma. So as a price approaches a certain level, they buy more and more of the asset, drives it up further. However, then people also then can see price reacting because they're buying more and other people buying more and accelerates. But then as it accelerates too much, people stop buying. And then the market maker also has to stop buying. Then all of a sudden it seems like it just gave up out of nowhere. But you've got this kind of double effect where, you know, a large number of participants all at the same time has stopped buying. And so when there are significant levels for things like options, that can be something to look at.
Yeah. Don't, Akram. I'm tempted to ask my wife to check if there's any apple pie at the cafe now. With regards to the question, those of you joining, just joining us. So this week we are doing a special giveaway every single day. We are giving away throughout the week. We are giving away 5 10K high stakes accounts. All of the giveaways are going to be the draws for the giveaway are going to take place on Thursday afternoon. But every single day, we will be doing a question where you can get into the draws for that particular day. So all of the draws are going to take place on Thursday. So the winners will be announced on Thursday. But each and every day, we're going to have a question. The link is in the chat. The link is in the description. Go to that link and you will be asked the question. If you don't know the answer to the question, go to the 5ers website, the5ers.com, and you will find the answers in there, or you will find it on the 5ers YouTube channel. That is, that's the best way to do it. But yeah, it's a great giveaway that we're doing this week. So make sure you get involved. Make sure you like and subscribe. We are also very, very close. Actually, let me have a look. How many subscribers are we at right now on the channel? Let's have a quick look.
Yeah, you guys got to punch this on to 75K. Because like we're saying, you get the double bubble giveaway. So
exactly.
The big one.
In the last month, in the last 28 days, we have had 4,500 new subscribers join us. So it's almost 5,000 subscribers in a month. We are at 74,548. So we are 452 away from 75,000. So that means that we have already done 200 subscribers just today. So you guys get subscribing, and once we get to 75K, Jonathan, who he's on holiday this week, but he usually takes care of the live stream and is the main host, he has promised that there is going to be crazy celebrations to celebrate hitting that 75,000. So yeah, plenty more to come. Sukiri, just trying to understand this. So these analyses are very primary, isn't it? No more advanced concepts or methods or logical theories.
I assume he's obviously missed the past period.
Yeah,
definitely touching on a bit more advanced stuff. And
exactly, we've been talking about very much advanced stuff. So I'm not sure if you've been following or just joined us, but I mean, on the one hand, the thing is, we're not talking about theory of entries all the time. Right, or talking about, right, this is where we're going to trade, let's get in, let's sell, let's buy. But we also don't go into great, huge depths of this is my strategy, right? The whole point of the trading room is to just discuss what's happening in the market at a given time.
Yeah, and it's like we were saying before about covering all the time frames. There's a lot of you guys in here as well. You got to remember everyone's at different levels. So we got to try and cover the broad spectrum without just leaving a certain group completely out the picture and going, I don't know what's happening, or what are you talking about, right? So we constantly ping pong back and forth between different levels, and hopefully the idea is that by doing that as well, you guys can piece everything together and see how it all fits. And over time as well, especially coming in again and again, it's almost like doing your revision every single day, and it will start to sink in more, and it becomes more repetitive and simple for you to just click.
Exactly that.
That's the idea.
Yeah, Manish, he actually drilled so many holes in the can that the can collapsed. He sent me photographic evidence. So the can is no more. All the
It
holes.
started on his house. His house
All-
fell apart. That's why he's had to move away, because he's got to rebuild it now. So
He's turned his house into Swiss cheese, drilling all those holes. So yeah. And Eduardo, the link is working fine. I've got it right here in front of me, and I can see people signing up and filling out continuously, even as I talk to you right this very second. So the link is working. You've just got to go to the link. You've got to log in with your Gmail, your Facebook, one of those things, and then go through and answer the question that's in there. And that will be the secret code for your first entry. And then you will have the opportunity to get other entries into the draw through following things like Instagram and YouTube and all those sorts of things. Okay. So, yeah. Sorry. Yes.
I was just gonna say, Amal, he did ask about New Zealand dollar, US dollar earlier as well, but we didn't get to it. So I just want to.
So I did pull this up earlier. I actually like this for buys right now. I really do. I really like this.
I think we might have a bit more downside first. I reckon.
I
think soon, but not yet. Right.
I don't think we're going to go. I don't think we're going to just bounce and cover this whole move. But just looking at where we've come to, this nice little cluster of orders here on the 4 hour. That's why I have that marked out. So even just a small, response back up, even back into this range. But I agree. I don't think we're necessarily going to just suddenly bounce straight back up, because we're not seeing that across the board on the others.
This is why I touched on Aussie dollar as well, because I think we're very much getting very close. We're within like 5, 10, 15 pips striking range, because Aussie dollar is very much looking the same. Just like I mentioned, we'd come outside of that channel earlier in ABL. We were talking about it. I would have liked to see a bit of a further rebound to 64.50 to then short. We didn't quite get there. I think we stalled out somewhere around 64.30. But we've absolutely come off now at 63.80. So this was exactly those kind of areas we were talking about. We've seen New Zealand dollar as well, obviously just absolutely come off a cliff. So similar deal. I would say, just like how we were talking about the cross correlations of other currencies sort of leaning into each other, right? I would throw up Aussie dollar and New Zealand dollar next to each other, and then see when they both start to really form that base. And they tend to help and sort of complement each other, and then both run together. So that's what I'd be looking at. New Zealand dollar is definitely starting to look pretty good here. I think there might be another 10 points. I mean, even like you were saying, actually, to be fair, Mike, this might actually be, we could actually be there, really. So if I go over to Aussie dollar, we have, what was the low there? 63.73. I mean, I would prefer to see 63.65 or so. But I guess now that's when you're starting to play with sort of semantics around price. It depends how far you're going to put your stop, that kind of thing. If you're running something like 3 to 6 points or something, then it's probably not good. You could easily just get taken out. But if you got something like a 10, 15, 20 point stop and you want to see it run higher, then looking pretty good here, to be honest.
I mean, we're in this nice area
in the
here.
strike zone, put it that way.
Yeah, we're in this nice area here. So when there's an area that hasn't been respected, so if you've got, for example, on the 1 hour, here's an example where we've got a 1 hour engulfing candle to the upside, and when price came down, it tried to bounce off, but it failed and it broke past it. There's still a bunch of buyers sat here, and so that's why it's kicked on from here and really pushed off. But what it does mean is that then there is a set of orders sat in here, and if you look at it right now on the 1 hour, I mean, we're coming to the close of that 1 hour candle. That looks like a really, really nice buy opportunity right now. I would probably wait before getting in, just so you can get the best possible price, because it's unlikely, I'm not saying it's certain, but it's unlikely that price is simply going to go straight from where it is and just keep going like that.
Yeah.
Okay.
You normally get like a
On-
sort of a double tap, another.
Yeah, exactly.
Right?
So on the lower
Yeah.
time frames, you will get price will probably react from here, and then it will come down, and then it will go up. And so what you want to do is you want to try and time it at that moment to get in here rather than here, because otherwise you're missing out on potential profits, right?
Yeah.
And
63.60 to 65 has been like a historic kind of oscillation level per the Aussie. So once you are approaching that, that's definitely a good point to look at. So I would just ideally, if you want an ideal entry, it would be in that 70 to 60 kind of range. We're at 85 at the minute. You could pull back. So similar deal. Obviously, New Zealand dollar is going to be about the same. Same with like points wise. You look at another 10, 15 points. So
we can see here, and this is the other reason why I would see us pull back just a little bit. It's just because it's very, very impulsive. In the next 25 seconds, though, the close of this 1 hour candle, I mean, it could close very, very strongly. That would be another indication of us going higher. But probably you might start to see us pull back a little bit in this area. So again, it's about that, getting that best possible price. So if you were trying to get the best possible price for your entry, you'd probably be looking for price to come up to here. So I wouldn't be buying right now. I'd be waiting, wait for price to come up here, wait for it to either be retesting this area here or this area here where it previously pushed off from, maybe coming down to here, and what you're trying to do is you're trying to get your entry somewhere here rather than trying to get it here. Because if you're talking about putting your stops, let's say you put your stops below this level here, right? Then wherever you're aiming for, let's have a look at that one there as a potential trade, right? Or even just to the previous support area, right? Right there, that trade isn't even 1R. If I bring that entry down to say this previous entry here, suddenly I'm at 1.5R. So you're just changing the entire structure of that order and making it far more profitable yourself. I know, because I've been caught out far too many times than I probably should admit, but I've been caught out so many times trying to think, oh my God, it's pushing up. And it's just the classic FOMO of a trader trying to catch a move when it's happening, rather than taking a step back and saying, okay, hang on a second, let me try and catch it on a pause, on a pullback, and so on.
definitely
so New
be
Zealand
looking
dollar,
about
US dollar.
80 to 85 for New Zealand dollar.
Yeah.
I reckon.
Yeah, exactly. 80 to 85, exactly. Nice little area. Aussie USD, again, probably something similar as well. Looking for
70 to
maybe
75.
a sell-off from here, look for it to come back in, and then buy up again. So the fact of the matter is the 1 hour candle on both of them has closed really, really strongly. So that is always a good sign. So yeah, definitely a good sign for buys on those. What else have we got? Just got a comment from Sweat and Style. Trust me, from experience as a knowledge transfer practitioner, it ain't easy accommodating everyone on a platform as this due to their various levels. Quite right, exactly. But we do our best to try and accommodate as many of you as we can. We've got a question here, or a comment from Luck, saying, take a look at super order blocks, fair value gaps, and breaker structure tools. Well, talking of order blocks, I feel as though it would be frankly blasphemous for LJ or I to even contemplate talking about order blocks when we have the godfather of order blocks.
Yeah, we have the god. That's what I was going to say.
We have him sitting, waiting in the wings to come take over from us. So with that, he's just getting himself ready. He's getting his screens all aligned and checking for those quasis and those order blocks and everything else to make sure that they are all lined up for you guys. So once we get the thumbs up from him, then we'll be heading off and we'll be handing over to Victor for the next segment of the stream. But as we wait for that, guys, a reminder, go and check out the link on the chat. It's pinned in the chat. It's also in the description. There you will find the link to the giveaway. We are doing giveaways every day this week. So make sure that you go into the link, cover that question. You've got to sign up, enter the answer to the question. If you're not sure on the answer, go check out the 5ers website or check out the 5ers YouTube channel, and you'll find all of the details in there. The giveaway draws will take place on Thursday afternoon after 12 o'clock midday. So you've got chances to enter every single day this week to win yourself one of those 5 10K high stakes accounts. That is it from us for today,
Punch
guys.
the sub as well, though, Mike.
Yeah,
punch the sub.
Yeah,
everyone on Twitter.
Subscribers.
If you're on Twitter, you only watch on Twitter. Jump over to YouTube, punch the subscriber button, because if we get to that 75K as well, you get the double bubble of the giveaway. Jonathan will go crazy, and you guys are all the winners. So it's all to your guys' benefit. So there you go.
We are 473 subscribers away from 75,000. So we are very, very close. So, so yeah, come join us for that, guys. Thanks ever so much for having us once again, and we will see you tomorrow once again. Have a good one, guys. Take care.
See you guys next time. Ciao.
Guys, ready? There is enough volatility today to go around the floor. How are you doing? Let me know in the chat. It's Victor. If you don't know me, I'm a trader, and I'm here to enjoy the next 2 hours with you. I say enjoy because that's what I do. I don't see trading as work. I enjoy it, and I hope you do too, because otherwise it's going to be very miserable, right? If you do something for many hours a day and you put in a lot of effort, and you don't enjoy it. Enjoy the ride, even if you're not profitable yet. You are at the right place to get some fresh ideas if you don't have any. Get some directions on your strategy. The chat is all yours, right? It's ours. You can access me through the chat, and that is one way you can become better. I say this from experience. So how are you doing? That's the question I have, and I see many of the regulars in our chat. Thank you all for coming by. Super happy for the session. Nice. I don't have a cat. I used to have a cat. But she passed away. A very cute cat. Very caring, very social. But anyways, yes. Thank you. I see you have been listening. And you know part of my secret sauce to be successful. It's this mask. Tell me in the chat how you have been doing. Did you have any positions open? Because EU, for example, had a quite nice gap. I say nice because it gapped in my favor. I had a position open on the weekend. Happy to see you too, Marina. At least I hope you're referring to me. Perhaps you're referring to someone else in the chat. But all the same, I'm happy to see you too. The announcement, Ole, the announcement of the winners will be on next week. Next week, it will be when Jonathan is back. There will be the announcement of the prizes. Don't miss the chance to win accounts. We will be giving a chance every day. There is a chance to win 10K accounts, 10K accounts, I should say. But the drawing will be next week, right? So every day during this During this week, you have a chance. And on Thursday, you have double the chance, right? So make sure you get your entry and you have your line, your fishing line in the sea or in the water, so you can. Thank you, Marina. I happy to see you too. As always, all of you, you make me feel warm inside. It's the same kind of feeling when you see old friends. That's the same kind of feeling I have when I get to these Discord sessions as well on YouTube. Yes, I mentioned Discord because we have a Discord community that I try to invite as many people in, because I think it's so helpful to have a gang, a group of friends where you can connect to, talk to technicals of the market, right? Analysis and strategy, but everything around it as well, right? Social group of people who know what it is being a trader, the ups and downs, because they are traders, right? So among traders, among each other, sharing a good time, helping each other, a lot of the time supporting each other in their journey as well, right? Doesn't matter how far you are in your journey, you can always use a nice chat and some great friends to join your network of friends, so to speak. All right, so let's look at the market. Vinicius is here as well. Yes. From yes, indeed, Vinicius. We have these sessions called Coffee with Traders. We enjoy them a lot. We poke fun. We share knowledge, and it's very generous. I say this. I mean, personally, I share just about anything and everything I know about trading in these sessions, right? The same thing I do with YouTube. On the Discord, we sometimes go even a little bit deeper, right? Because you have more time, etc. But it's not only I'm there sharing as much as possible, but it is always also others, all the members, many of them, not all of them, but many of them, especially the regulars, you will see them from time to time share their ideas, their strategies, little bits and pieces of their strategies, things that you can use, right? I sometimes see things, I see, wow, this is useful. I could test this out and see if it helps me or not. And if I say that, then it's probably just the same for you. I see in the background we have Dr. Deanna Cole. Whenever she is ready, I'll be happy to include her in the. You are okay. You are. Is that a thumbs up? Did I see a thumbs up, Deanna? Okay, it is. Okay, thank you. I wasn't sure. Ladies and gentlemen, we have the pleasure, the honor to have among us Dr. Deanna Cole. She is going to join us in a couple of seconds. Here we go. Yes, here we are. How are you today, Dr. Cole? We can't hear you. Yeah, I think we don't have it.
There you go.
Yes.
Now can you hear me?
Yes. How are you doing today?
I'm doing pretty well. Good to see a lot of familiar faces in the chat.
Yes.
Did you have a good weekend, Victor?
I did. I had a very relaxing, very energizing week. All my biomarkers are optimal, are hitting all-time highs. I'm happy for that. How are you doing? And not to mention the trades. I had a short on EU from last Friday, and obviously that many of my trades, I had multiple trades open. Many of them they gapped in my favor, slipped in my favor. So awesome. I mean, but health firstly, the trades as well, they're doing well. How was your weekend?
It was phenomenal. We're traveling. As you can tell, I'm in a vehicle because I'm having a hard time finding good spots to stream while traveling, but it's been great. My oldest son had a lacrosse tournament, and I went golfing with all three of my kids, and I've been to the driving range, I think 3 times with my youngest son. So it's been just a blast. shopping, just, living it up in the summer, having a great time with the family. It's been really
Awesome.
fun. Thank you for all the love in
Awesome.
the chat too. I see so many comments saying good morning. It's great to see everybody. Thank you so much for joining us, and excited to be here.
I'm very you know what the thing is, I love about our stream, Deanna. It's because this is real life, this is raw, this is life as it is. We show you, look at Deanna. Dr. Cole is showing you, this is what she's doing, right? It's not makeup trader. No, this is the real life of a trader who is, life goes on while we trade, so we have to adapt to the situation. I do the same thing as I travel. Those who have seen me in the past, you'll see my background change, and it's because I'm every so often another location, which is, that's the life we want to live, right? We want to have those freedoms, and that's especially possible with trading because it is not bound to any fixed location. Deanna, how do you handle your trading? I know I've asked you this before, but for those who are watching you today, how do you handle trading while on the go, while you're traveling, while you're doing family time? Does it impact your trading in any way? Do you scale down? Do you dial down? What do you do?
That's a great question. So for me, I know we talked about this last week, and it was felt a bit controversial, but maybe it was just everybody has big opinions. I always trade on just a single laptop. I have access to multiple screens at home, and I just find that simplification for me is the best way to do it. I think it probably is true for most people. Multiple screens, many screens look super cool. Have my screen look amazing, but so to multiple, sections, and they click a lot. So I travel with my laptop, and I often as I always do. As far
Deanna,
as how I handle it,
I'm not sure if I don't know. Yes, I don't know. It's I thought maybe it was just me, but your sound was breaking up quite a lot, so we couldn't hear, I think, most of what you said, especially the last part of what you said. So I'm going to perhaps ask you again in, I don't know, a minute or two, as the connection perhaps gets better. Yes, yes, indeed. No problem. We will come back to that question, Deanna. Since I'm not going to ask you another question, let's see. EU, maybe I can talk just a little bit about the gap that I was mentioning earlier, and then we'll come back to your answering that question. We'll have another attempt to your answering how you handle trading on the go. All right, so we have the this is EU. As you guys can see, this is the 5-minute, and previously I was looking, or not previously, but yes, it is previously, on Friday I was looking to short this area, right? And it didn't work out according to the, not according, but the signals. I got stopped out, right? I got stopped out here when price came back. However, that is with my main strategy. However, after later on, I did take some. When I saw this was overextended, especially this push, to me that was the sign that we are, the market is overextending, exaggerating the move, pushing everything. It is all the signs of a squeeze, and we were likely to go the other side. And I took entries here, and I took some more when we broke that low as well. And I held them. Held them through the weekend. And as we can see here, the market gap quite a lot. That has everything to do with the developments in the Middle East. Of course, no one, I mean, would have, no one missed that unless you're living under a rock. It's been all over the news everywhere. So, and what's nice about TA, as we, what happens a lot of the times that people say gaps, you can trade gaps, and some others, when I first started, I wonder, how do you trade gaps, right? This is a very beautiful example of how gaps are traded, right? When gaps are created, when the market opens and the price is completely a different level, a lot of the times, not always, price tends to come back and close the gap, right? That from that moment, right, from that level, from where we were last time, right before the market closed, and this candle actually could well be, let's see, that level, right, and this the open, right? That's the gap, and the in between, that's the gap, and we typically see how the market comes back and closes the gap, and that's a very common, very popular strategy, right? You can measure this, right? Weekend gaps, how big they are, and how bigger gaps and not so big gaps, how they behave in time, and you can build a system. There are many people who have it's a very popular and solid strategy. You can have a lot of data on it and trade it successfully. And this is a very nice example how you can see that we open up with a gap and close the gap before we continue the, change direction and continue in the direction of the gap, right? It's a bearish gap. And as soon as we close that gap, you can see how the market changes direction and goes the other way. So that's a very beautiful, very technical. I see that we lost Dr. Cole. We will have her again as soon as possible. We will be hopefully with a better connection. Yes, under a rock, indeed, right? I mean, it's been all over the place. It's been the topic of the day, the week. It's been the talk of the town, these developments. So, all right. Indeed, if we when we get 75,000 subscribers, we will have a special surprise for you guys. So we're very close to that number. So don't forget, subscribe to our channel, hit the like button, keep making this stream a great place, great source for other traders just like yourself. All right, so let's look at the I see that perhaps Dr. Cole will be, let me send her a message. Let's see if I can get a hold of her. All right. Okay. Anyways, we will, I'm sure she will come back whenever she can. Okay, so let's look at the markets, right? So let's break this down. If you have any specific pair you want me to look at, let me know in the chat, and I'll gladly take you, break it down and take you through it. Maria, nice to see you as well. GU, Liban says GU. Let's do that. Let's go to GU and see how we are looking at price action in this pair. All right, so let's start. That is a huge gap. That's the same thing we have been talking about. And let's see on GU how it is looking. Same thing happened with GU, right? You can see that obviously both of them are dollar pairs, so They trade quite similar, not all the time, but in this case, since dollar was the driver, it's very obvious or very likely reasonable to expect both of them to work or to move the same direction. I mean, all right. So let's break it down. Let's look at the monthly time frame. Do we have any fresh order block or entry order block based on the quasis? Yes, we do. We do have a quasi entry order block here. And I've been telling you, I mean, the audience and perhaps even you personally, I've been saying this for some time, right? EU and GU, both of them are interacting with a higher time frame entry order block that is a monthly, right? A monthly time frame. And until it actually does give us a signal, there isn't anything to do, but it is something to be aware of, because if we can catch a monthly structure being bounced off, that is a huge, potential. I mean, a monthly, just imagine my signals, if it's a fresh order block, I'm looking to go a couple of bars in the future where I have a high probability of knowing where it will, end up being. If that's on the monthly time frame, you can only imagine what that would do to your P&L. All right, so we are in an entry order block. This is the left shoulder, the head, that's the neckline, and we came back to that entry order block on the monthly. And this big movement, I don't think it's ready yet. It doesn't say anything yet. This order block is quite big, and it hasn't signaled us anything. But just this move is it brings it up on my radar from, I should be ready whenever that signals. It still have the end of the month before we can get any possible signals, but we want to be ready if that happens. And I'm going to be here, 4 times a week. And if there's anything, I'll let you know. I'll take you through the, the signal. All right. So on the weekly time frame, we just created a fresh order block on the weekly. Look at that. It's not an entry order block. It's just a regular weekly order block, right? It's fresh. Whenever price comes back to that order block, we want to be looking for reasons, confluences, lower time frame alignment with this weekly to catch our reaction, right? And since we created a weekly, the general idea is that price moves from one level to another, right? So if it creates a weekly, it's going to have basically 2 ways it can continue forward, right? One is it tells us that the sellers are coming in and they're likely to be stopped, right? If you don't have any other information, your best assumption is to assume it's going to be stopped at a equivalent time frame in the structure in the opposite direction, right? So a weekly time frame, but a bullish one. So what we're expecting is that price, just in general terms, when we create new structures like this, the question is, are we going into the next structure directly, or after we first bounce or retest that order block? Maybe that retest could happen after our target being reached or before of it. But basically, that's what the market is telling you. Sellers are coming in. You automatically look, if this takes on and continues, it makes sense for us to target this weekly order block right below us, which is what I would be having as a target if I'm in a trade. Okay, so we have that fresh order block. Other than that, there isn't anything else to look. Martin says 7 wave move up. I don't know about that 7 wave. Please tell us about it. I'm not familiar with these number of this count of waves. Thank you, Stephen. Thank you. I really appreciate your compliments. This is the mask strategy. If you want to have good results, put on your mask and you'll see the difference. All right, so we have the weekly it doesn't tell us anything else. Just if it comes back to that order block, you want to be looking for that on the daily time frame for reasons, for signs that it is reversing, right? If you don't want to force anything, if it doesn't show you that, then maybe it's not going to reverse and it's just going to continue, right? Not all order blocks are going to work all the time, right? It's a matter of probabilities. But let's look at the lower time frame. So what else do we have? We do have below us, you can see it at the light shade of that order block that it attracts attention. And I chose that color just for that because that's an entry order block on the quasi, right? Hello, Evaristo. How are you doing today? It is an entry order block on the quasi. This is the neckline. That's the left shoulder. We have here a downtrend, and then the break of the neckline, and it comes back. Well, we don't know if it will come back, but if it comes back, this will give you an entry from that order block all the way through that to the end of that reversal or the structure, I should say. So if you didn't have any information, any refinement from other time frames, which I will be able to give you later on, but even if you didn't have it, the basic idea is you take an entry here whenever you see the reversal happening on this time frame, and you target the top of it, right? That's the general idea. You put your below the order block, because sometimes, of course, we know it tends to get squeezed, get tested before it changes direction, right? So that's one idea. But of course, I'm going to give you, not today, but if and when it happens in the future, we can get in. I can show you the levels, the structures you need to be watching. So you can get in with a much tighter stop. I'm talking about 15, 10 pips, and sometimes even less. At times, even like 5 pips stop. And imagine catching a move with a tight stop all the way to the height or the top of that structure. You can already see that on the screen, 426. I mean, it depends where you get in, of course, right? We don't know that. So we are. So that's the idea. We did have an order block here below, right? But this is what I talk about a lot. I say, order blocks, they have a time and a place to be traded. You shouldn't trade every order block the same way, or even the same order block the same way through time, right? This is a very nice example of what I mean. At this point, when price came in, the order block was fresh. We have Deanna with us. Can I add you? Let me know whenever you are ready. Yes, no problem. Take your time. Take your time. Yeah, so we whenever we the first time around, the first test was a fresh order block, right? And we can, I mean, it may seem, if you haven't seen this before, you may say, well, it's easy to say because this is, capture hindsight. This is already happened. It's easy to talk like this. Well, but we will be able to see this over and over again. I can show you even before it happens, when and when not to be trading these order blocks, right? These are the benefits of trading or watching our stream. You'll get the information and things we do while we're doing it. Not there isn't anything. I'm an open book in terms of my strategy. For the most part, there are certain things that I don't specify, but that's for your own good. Otherwise, you can basically, I'm giving out the whole strategy, with a very great detail. This is the first time. This is the first attempt. The second attempt to break this order block. Normally, I don't trade those. Once it's on the second retest, I don't trade those anymore. You can see that this one got squeezed. It did hold. Price did react. On the third attempt, it broke well, it hasn't broken officially. It needs to close below it, but it's pretty likely to break it at the end of the day. So we'll have to see how it ends. But this is exactly the observation or the price action where I based my idea of a fresh order block. This is exactly what I saw so many times, that I came up with these fresh order blocks rules, right? First attempt, that's the one that I want to be trading. You can trade the second retest, but it's not as strong anymore. And the more retest it has in the future, the weaker the order block becomes until it breaks. Okay, so let's break it down on the daily. So what else do we have? We do have as we broke this quasi here, or so we have one. We actually have on both direction. We have quasis. This is one, right? So that's the established downtrend, and we have a left shoulder, a neckline, and a break of that neckline. And whenever we come back to this order block, you want to be looking in here as price tries to reverse and create those quasi again to get your entry. You go to the H4, H1, H2, and then for your execution, or you may just stick to H1 as well. It doesn't really it changes the probability, the win rate, and your risk reward ratio, but it's equally, well, I wouldn't want to say equally, it's perfectly tradable. It has a lot of edge as well. And whenever it gets there, as I said, you want to be looking for those quasis again, or some other indication that the market has or is trying to reverse. Let me know whenever you're ready, Deanna. You are. Okay, perfect. All right, so here we have, here you are. Hi there. How is the sound? Let's check your sound.
Yeah, can you hear me okay?
Yes, I think
for the chaos. Hopefully I'm back for good now.
No problem. We know how it is when you are alive. These things happen. Deanna, we were talking about earlier. You were, I asked you how you deal with being traveling when you're trading. Does it change anything? You were making your case about simplicity, about one screen, about how it may look very cool to have multiple screens, but you were saying something down those lines.
Yeah, that's exactly it. So I just try to keep it really simple. And what works best for me is to really know what I'm looking for, what my strategy is, and stick to that as much as possible. So one thing that, anyone who has had a bad trading day will know, when you have a bad trading day, it can, if you allow it, really change the course of your day. So especially when I'm traveling, I want to make sure that my mood is not affected, that nothing is affected. And so I really just try to, I don't know that I don't necessarily change the size that I trade, but I just kind of try to lower my expectations, keep it reasonable, lower my expectations, and really reminding myself, some trades win, some trades lose. We're just looking for probabilistic entries that are part of the system, part of the strategy, and it's going to be what it's going to be. So more often than not, I really try to enter a trade and walk away. When I'm at home, I have the luxury of entering the trade and kind of watching the price action and see what happens. But I don't want to be stuck at a computer screen when I'm traveling. So I really try to, kind of adjust my mindset and my expectations when I'm going into a travel week or a travel period. But other than that, it's pretty much the same.
I see that. I was going to ask you, like, how many hours do you need to trade normally when you're not traveling?
I don't need to trade any set number of hours, really. I'm looking for certain setups, and I can modify it however, meets my needs. So for example, relying extra heavily on alerts when you're traveling so that you don't have to be sitting at the computer. Maybe you're socializing, maybe you're out with friends and family, and you're still able to, duck away and take a trade, maybe, Or like, for example, if I'm in a hotel with my family and we're all winding down watching TV, something like that. For me, the Asian session is when everybody's kind of getting ready for bed and stuff. I love trading the Asian session. So I might take more trades during the Asian session versus the New York session, which for me is going to be, you know, when everybody's awake, the kids are waking up and stuff like that. So in that sense, I do try to, you know, if the trades are available, try and prioritize taking them the night before. So for example, last night, trading the S&P, there was a huge gap down, price rebounded nicely from that level. I took a trade. I was there watching it. My kids were watching TV. We were all hanging out, and hanging out casually, right? So like winding down for the day. It wasn't like I was missing out on family time, but everybody's watching TV. We're resting, relaxing. I'm taking a trade, and then eventually went to bed and have my stop set, have my take profit set, and then woke up this morning and you know, this was ended up being a good trade. You know, so I think that's the best way to do it. If you can do that. I have a friend who trades one trade a day. He only takes one trade a day. He enters the trade when his conditions are met. He has his stop loss in place, has his take profit in place. And then he told me that he actually locks himself out of his home office. Locks himself out of his home office and waits for his wife to come home and unlock the door the next day. And you would be surprised, he is phenomenally more consistent than I am, because he is really strict on that one trade a day. And so it's possible to do things like that. But for me, like I said, prioritizing evening trades when they're there, that gives me now the whole day I'm free. I already have my take profit hit. I have one runner in place. So I'll still, you know, check the market, and then I won't take another trade until what is for me evening time. So it's nice if you can have two markets that you know, two sessions at least that you trade. And even if I was awake for it, I would love to trade the London session as well, but I'm usually sleeping at that time.
I see. So you're not fixed to any specific session. Your strategy isn't. That gives you flexibility, right? So, is it the same strategy that you're trading, the same pattern? I think you mentioned it is. Is it?
Is it the same strategy that I trade when I'm away? Yes, absolutely.
When you're switching sessions, let's say you mentioned you can trade Asian because on the New York session you're less available. Is it the same setup, same things you're looking for?
Yep, exactly the same. So again,
Okay.
simplicity is the key, and that's what I'm, you know, I just want to do the same thing over and over and over again. So absolutely same exact strategy. The only difference I would say in the New York session is I pay attention to the market open and news. Not that I necessarily adjust due to the market open, but those times can be really, really important to be aware of. You don't see as many high impact events during the Asian session. So that doesn't change my strategy at all, but maybe my behavior, you could say that I pay attention to that.
I see. And when you backtested, were you aware, were you consciously also backtesting the Asian session to know that you can, in case of this, while you're traveling, you have that possibility to move to an Asian session, and you know you have some data? Did you have that statistical backing as well?
What I'm doing is kind of universally applicable. So it really doesn't make any difference if it's even the London session, which I never trade. It's all the same thing. So looking for high impact moves after some type of liquidity has been taken, a momentum move, all of those things are universal. You could trade it across assets. For me, I find it better to just pick one, because you get to know it a little bit better. You want a high liquidity asset. I use the same strategy on gold, but like we talked about last week, gold can, you know, it's back in this period of like just being a little bit difficult. It just like your stubborn child or something, right? It's just has not been as compliant lately. And so for me, it's been, you know, the times when gold is really, really good, it's really, really good. And then lately, like we talked about last week, it's just been a bit of a stinker lately. So yeah, it's all the same. It's just looking for areas where price, especially in ES, because the S&P has an upward trending bias and has been very much in like this buy the dip move, and so it's the same across sessions. It's always the same.
I see. So in your case, your strategy is very flexible because it's something that is universal, and it doesn't really matter what session you trade. Price action behaves the same way whenever these phenomenon happen together, right? This pattern, liquidity you mentioned, and then price will move, roughly the same, no matter what session it is, what time of the day it is. That's great for those who have a strategy that is perhaps a bit more sensitive to the time of the day. I would advise to build your case the same way as you gather data, trading the sessions that you normally trade. If you're traveling, and you want to be using the same strategy but in a different session that you normally trade, that you gather those data as well beforehand, because it's not always that a strategy is movable or transportable to a different time of the day. Sometimes the strategies are sensitive to from, for example, I know for a fact that my strategy, there is a significant difference if I traded London and New York compared to Asian. In my case, it's still profitable, but it's not as profitable as London and New York. But that's great to know, Deanna. And you mentioned that you put in your stops and your targets, and you went to bed and woke up the next day, and then you get the results. Is it always that you have a passive trade management strategy?
Not always. If it's the New York session, then I can pay attention to it. But in this case, it was, time to go to bed and move on. And so then, a passive strategy works. And truthfully, I find that a passive strategy, set and forget type strategy, does work better. It's just, not always what I do. But to your point about the New York session versus the Asian session, they can be very different, and price definitely moves different. And that is one of the benefits of like the set and forget is, especially for example, in the Asian session, price moves so much slower. And so it can be really helpful to, enter a good trade and then walk away. And, honestly, probably so with the New York session too, in a lot of ways, because when price is moving really fast, it can be really hard to just let it be, let it go. So both, or consistency is better. But as we know, it's not always easy to be perfectly consistent, but that is where having just one asset can really be helpful too. And I just want to address a comment in the chat here. It says the mathematics tutor said, I've failed 2 10K and 3 5K funded challenges. And I just want to, a lot of times what we see on Twitter or social media is people sharing their wins. But I just want to let you know, it is highly, highly likely that most traders, including myself, have also done that. And I know Vinicius hopped in and said, that happens. That's kind of part of it. And I think there's a tendency for us to think that that's not what others are going through. And that's just not the case. So to me, the best way that I found to deal with losing challenges and even losing funded accounts, I've lost funded accounts before, and it's devastating. But to really look back and remember where you were 6 months ago, remember where you were a year ago, how, maybe if you haven't been trading very long, where you were a month ago, and thinking if you have come further than you were back then. Because I think it's a pretty normal progression for traders to, this is my journey. And I think I hear this from traders a lot, something similar, where at first I was learning how to trade and I was trying to pass a challenge. And then finally I was able to pass a challenge and I was funded and I blew the funded account. And then I finally, passed a challenge again, held the funded account a little bit longer, then blew it, on and on and on until I could not only pass a challenge, get funded, and then maintain a funded account. And that sort of like process, I think, is pretty normal and pretty typical for most traders. I think there's a tendency for us to think about trading and trading funding challenges as like riding a bike, where you get on a bike, you learn how to ride, you don't fall off anymore, typically, right? Most of us, unless something crazy happens, we don't generally, after we learned how to ride a bike, fall off. However, trading is a lot more like learning to play hockey, I think. It's a lot more complex, and it's a lot less, learn the skill and then be done with it. So it's kind of like if you think through the process of a hockey player, first they have to learn just how to stand up on the ice and, without falling down, and then learning how to skate without falling down. And then maybe they get a stick in their hands and they learn how to, skate around with the stick without constantly falling down. And then pretty soon you introduce teammates and opponents and that kind of thing. They'll still fall down sometimes, right? Hockey players fall down all the time. They get checked from behind all the time. That's just part of the process. I think that is more realistic for a trader than riding a bike. So when you're, feeling upset, feeling frustrated, I think Vinicius's comment was, really great to look back and make sure you're following your strategy. But if you are doing that, if you are following your strategy and you are still falling down, there's some degree of grace that you need in that, just knowing that that's just a part of it and that's just the way it goes. And, as long as you're incrementally getting better and better, I think you're probably in line with the rest of us.
You mentioned it took you 1 year to be able to hold your funded accounts without losing them. Did I hear correctly?
Yeah, I had been trading for quite a while, in a longer, swing trading. So I did not have to close my trades every single day. And then when I started with the funding challenges, the whole intraday or the day trading aspect was brand new for me. And it was a lot harder, right? Because it's a lot more exciting when you get to trade that often. And with that comes the opportunity for more errors, more psychological errors as well, FOMO, getting too excited, all of these things that aren't a part typically of swing trading. You don't often, get overly excited in swing trading because it's just kind of like you take your trades and then you wait. But when you're day trading, that's not the case. And so, yes, when I first started taking challenges, it took me a while to, again, with a foundation of already being a trader in a different way, took me a while to figure out how to pass the challenges and then how to maintain the challenge. So at least a year, just to figure out how to keep it. And then the next level is, okay, now I know how to keep it. Now, how do I get paid? That's a whole nother thing, right? Because it's really exciting to see that money start to, the potential for money to come to you. And then maybe you take a string of losses or something and that impacts you. So yeah, it takes a while then to get to the paid level and then to maintain that where you're consistently getting payouts if that's, if you're on the funding path. So it just takes a lot longer than anybody tells you. I think, social media is a real detriment for most traders because it sets us up for expectations that are unrealistic, that everybody else is doing well. Everybody else is constantly getting paid. Everybody else is having 5-figure days. This is not the truth. It's just not reality.
Yes, and that's why we're here, showing authentic traders doing authentic trades and talking about their ups and downs like you are currently. Deanna, that's why we have you here. That's why we have everyone we have on our team. It's to show the raw reality of trading. One question, Deanna, what time frame were you using when you were doing swing trades before you started with the challenge accounts?
Well, on swing trading, typically looked at daily charts. So you don't have I would look at 15 minutes as well, but you don't need to have as tight of I don't know, it seems like forever ago, but when I was doing that, there was no 1 minute chart. Like you didn't need that. If you're swing trading, you don't need to look at anything beyond like an daily chart. And then I would look at different moving averages and that kind of thing. And so I don't think it was really until the funding companies came around that I personally started looking at lower time frames, because we know everything is fractal, right? So there was no reason for me on a swing trading account to have to look at anything but the daily.
Yes. All right. So
time, how long you're holding your trades too, but for what I was doing, the daily was perfect. And honestly, if somebody is having trouble, I think the daily is your best friend in a lot of ways. To I wouldn't do exclusively the daily, but the daily is a really powerful tool to be able to understand big picture what's going on in the market. And then 15 minutes to hour are my two kind of favorite intraday day trading time frames.
yes. Perfect. For those who were watching the chat, S Mike just got banned, and that is because he doesn't know how to behave. S Mike, you're welcome to come back whenever you can. Okay.
And Victor, I was kind of reading through the comments as they were coming in. I don't think I got all of them, but one thing, I feel a little bit protective of traders these days, just because I felt like, when you're learning how to trade, there's so much information coming at you, and you never know what is truth and what is hype, right? And most of it is hype.
That's true.
Yeah. And we had this conversation last week, but when somebody comes in, or you hear somebody saying you can't fill in the blank, you can't trade off the dailies only, you can't use indicators and make money, you can't trade ICT and be successful at trading. I'm not saying you can, but I'm just saying be careful of any trader who says you can't fill in the blank, because nobody knows for sure all of the things that you can and can't do. Now, when they're saying that basically means they have not been able to fill in the blank. But I think it's really important to be careful about, people saying you can't, whatever. But you also have to be really careful about who you listen to. I wish it was a lot easier for traders to get. I know for me, I think my journey was delayed in part by not knowing what resources were authentic, what resources were good information, and what was salesmanship, and or other things, even craziness. And
yes.
So I feel bad for traders that it is that hard, and myself included. Like it just, still, I enjoy this stuff. I love talking about this stuff. I love learning about trading, and it's just really, really so difficult to get good information. So just be careful and protect yourself, I guess.
Yes, I totally agree with that, and I'm very skeptical myself as a person, but as a trader, a lot more, and very critical of everything that is said out there. And to this user or this member, this viewer watching, saying he didn't agree with what you are saying, but he doesn't see why that person was S Mike, was banned for saying it. Well, LM's the issue wasn't the fact that he was disagreeing. I'm happy. I want people to tell me what they think. If they disagree, we want that engagement. We want to know your opinion. You don't have to agree. That's not the point. The point is, we're here. We need to treat each other with respect, right? So you ask your question respectfully, and I will, I'm not shy from people who or from people who disagree. I love that, because then we can have a counter argument. Maybe you can show me your argument, and maybe I can learn something. And if not, we just, share each other's arguments, so we both know the situation better. So it's not the issue of disagreeing and saying and expressing it. That's welcome. The issue is respect. You do it in a respectful way, in a way that you would do in public. If someone is talking about something, their experience, you don't go to them and say, disrespectful things, right? You don't behave like that in public, so you shouldn't do it here either. That's the whole thing. But thank you for your comment. I like that. And normally I'm very cautious before banning anyone, but this person was, had a number of comments, and we don't need that in here. That person, by the way, ask Mike, if you're listening, if you come back, you're happy to come back, as long as we can have a normal conversation. All right, so Deanna, coming back to you touched upon many things here. You said there's how does the trader watching us, for example, how do they know what is a sales pitch and what is hype, and versus what is actual trading advice? How can they know? Because we are one of those person talking to them through YouTube. How can they discern between truth and just sales pitch?
This is a really good question, Victor, and that's something that I think about personally a lot too, because like I said, I love connecting with people over trading. I don't connect with my neighbors or people in my real life over trading. It just doesn't happen. And so it's kind of one of those things where, like, the internet really is the best place to find like-minded individuals in this way. And it's just really hard too, because if somebody really is going to share a lot of information, they do need to get something for their efforts, right? Like, it doesn't make sense to continue to do something if takes you a lot of time and energy and costs you, in the sense that you're spending time and energy doing something, but you don't get a return for it. So you don't get paid for it. So it's kind of this really difficult situation where, you want to be careful about that, but yet there's nothing wrong with somebody wanting to make money for their efforts. So I just really think the best way, or the only way that I figured out, is trial and error, right? Just figuring out how big their claims are. If somebody's making huge claims, I wrote the algorithm, for example, like that's a little bit too much. Okay. I drank that Kool-Aid too, so no judgment there, but it's just like, you just got to be a little bit careful. I don't honestly have great advice on how you discern. I think it takes a lot of time and energy. I have paid for advice for years, so been in different mentors. I don't know that I think he did call it a mentorship, not with the one that you're thinking of, but different people that I have learned from, and I have paid for those services. And it's been just your try. I don't know. I don't have a great answer for you, honestly, Victor. I feel like I'm still figuring that out. And I will say that your number one best chance to find success in the market is you. So it's your energy, your effort, your discernment that's going to make the most difference. And one thing that I have personally also found is it is really helpful to make a few friends. So yes, you want to learn from people, but just having a couple friends, it only has to be one or two. But if you can find one or two friends that just are in the same place as you, have similar interests as you, like I have a friend I met through YouTube, actually, and we just check in with each other from time to time. Hey, how's it going? Oh, I FOMO'd this week. How's your trading going? And that's actually honestly been way more helpful to me than any paid thing that I've done so far. You know, having somebody that we just, you know, sometimes I have a bummer week, and then the next week it will, you know, and he's doing fine, and then he'll have a bummer week, and then that has really helped a lot, and it just makes trading feel a little less lonely. I think that's one of the benefits of the 5ers, because you see the same people in this chat week after week after week, and it is not hard to reach out to somebody and just connect. I can name probably 5 or 6 people who are in here every single week. You know who you are. We love having you here. Vinicius, Marina, Manish, you know, Louis, like all those people are here week after week. Reach out to them, you know, and see if you can connect. I personally think that is really, really helpful. I maybe I shouldn't call people out. Maybe they're not interested in connecting, but in the Discord, you can find people that you are seem to be on the same trajectory with, and just find a peer. And I think that is probably a really good way to do things and share information that way. But as far as discerning who is legit and who isn't, that's a big task, Victor. What are your thoughts on that?
It is. I do have a couple of things. I never thought about, you know, I wasn't asked, or maybe I was, but I don't remember being asked this question before. It's very difficult, very, very difficult, I think, because the very source, it's how do you trust if the source is, you know, your only information you have on that source, right? That's very difficult. You don't have an independent source telling you that this program, course, mentor, or whatever strategy is good. It's the very own source, this person telling you that they are good. You know, how do you check that? That's very, very difficult. You know, it's you gotta have something to check it on. So one of the things that and by the way, I see S Mike has joined us again. Welcome back. Why the what I would say is this: it's not easy. There is no shortcut to knowing, you know, if someone is actually telling the truth and is giving you something of a lot of value, or is just, you know, regular not popular, but public info just repackaged and sold to you. Because that's what happens a lot. Let's be fair. That happens a lot out there, right? Public information, things that we've seen for many, many years. It's out there already. It's been, you know, taught in many different ways, and someone comes, takes the same thing, just, you know, puts a name on it, changes the terms, and sells it for big bucks, because, you know, nobody really knows, and they can get away with it. And I think, I don't want to be cynical about it, but the only way for you to there are two things you can do. One is just use common sense, right? If someone is telling you that, you know, you're gonna, you know, make it in you know, you're gonna be making millions in less than a year, that's not gonna happen. Let's be real. That's not gonna happen. Or if they say just 15 minutes a day and that's it, you don't have to learn anything, just 15 minutes. That's not how it goes. Thousands of hours goes into this. And yes, you may down the line have a strategy that only needs 15 minutes a day of, you know, market chart time. But in order to get that, it takes years of time and experience and effort. But the one thing that I think is the most important advice that I could give anyone thinking about, you know, learning something from someone, any source, it doesn't matter, paid or not paid, it's not even about that. It's also about your time. Deanna, you said that correctly. It's also about your time. It's not only about what you pay, but your time is precious. You can get that time back. So you better spend it wisely. The only thing you can do is, as soon as possible, test it. Test it. If something is true, it doesn't matter who tests it, it should come out to be true, right? When I say, for example, when I talk about order blocks and quasi, you don't have to believe me, right? I share what I trade all the day, every day, and what makes me successful. If you don't have to believe me, that's fine. Actually, I don't want you to believe me, but I want you to test it. Not me, test the order block. Think of ways, experiments, how you can check or observe what happens when these structures form. How many times do they hold? Does the fresh one hold much more often than the not so fresh, right? Does the entry order blocks on the quasi, do they hold any truth or any value or not? Find out for yourself, right? I think that's the most the best way to find out if something has value or not. The only problem is it takes time. You have to learn it first, and probably if it's a strategy, you have to buy it first if someone is selling, and then get to learn it and be able to test it, right? But that's the only way I know. Get back, go to the data. The data will not lie, and that's the best. It doesn't matter who says it. If the data is supporting it, I will accept it as the truth. We have a lot of a lot of engagement. I haven't been able to read all of them.
I know, it's amazing. I'm trying to keep up with the chat, and I just want to say thank you to everyone for jumping in the chat. To me, it makes it so much more fun when people are engaged. And I'm doing my best to read through everything and to process and also hear you. But I think this kind of engagement in the chat is so helpful and so lovely. And
yes,
in a lot of ways is what I'm talking about as far as community, because we all go through the same things. There's nothing new in trading. It's kind of like when you're telling your teenager, trust me, I've done it all before. I know what it's like. There's no thing that you can do that I'm going to be surprised about, right? It's just like that in trading. There are so many errors that we feel like, oh my gosh, how could I make something like that? And chances are everybody else has made that too. It's not just you. And so I appreciate everybody being in the chat and sharing their opinions and, going back and forth. And I see a lot of really great insight in here. So thank you so much to everyone for engaging and being active in the chat. I love that.
As Mike has a good contribution. As Mike is saying, you need to journal with trades recorded. I'm not sure what he means. I think he means the trades that are being taken by that person that says that they have a strategy. Yes, and I do think that that's one way of testing it, but I don't think that's the whole thing. That's one start, one first step to do. As Mike, very good of you to point that out. However, as you all know, when you're following someone, that person has, the ability. You'll have to trust that person that they're actually showing you everything, and that's that's a little difficult, right? If you see someone on YouTube, and I know what we are on YouTube, but if you see someone on YouTube, on Instagram, and you think you record what they take, they may only show you when it's profitable, right? Then
that's tricky too. I don't know if you think about this too, Victor, but like unless you're paying somebody a ton of money, they owe you nothing, right? They do not owe you their stats. Now, if they're selling you a signal service or something like that, of course you're going to want to see what they can do. But even then, they don't have to show you everything. No, you are not entitled to see someone's P&L. You are not entitled to see someone's trade history. However, if you are going to purchase something from somebody, you have to assess whether or not your purchase is commensurate with the information they provided. Does that make sense? So
it does.
Yeah, I share I don't sell anything, but I do share my track record publicly. I would not buy something from somebody who did not do that. But at the same time, I wouldn't expect somebody in my situation who shares some of their trading to share all of their trading. That's just not, that's just not realistic. And nobody has to do that. But I think you have to find that balance between what somebody shares and what you're paying. Like, for example, there's a person that I follow on Twitter. I don't know that he shares his record publicly, but he does share about himself, and he has a huge track record on Twitter, which is public, right? But his newsletter is super cheap. It's very inexpensive, and I know from experience following him that the information he provides is excellent. That's an example of somebody who, you know, I don't pay enough to for his newsletter to expect that he's going to show his, you know, validated track record, except for what he publicly provides on Twitter. So there's always this like balance where you have to adjust your expectations based on what you're, you know, what you're receiving as well.
Yes, I understand that, and there's this topic is very broad, and we can certainly touch upon it more often, because, for example, also, you know, we see that in our Discord community as well, right? Where you don't have to be a top-notch trader in order to show and teach and help others who are also, maybe you are at level 5, maybe you know, you do have a funded account, you did get, you know, a number payout, but you're still, you know, learning and improving yourself. But you can at that level help someone who might not be funded at, or it doesn't mean that funded is the, you know, the milestone, the reference point. But I mean, the point is you can help someone who is at level 3, at level 1, and even someone who is not profitable yet can teach someone, you know, a beginner, a lot of things, because it, you know, the profitability and later on consistency is really at the end of the, you know, the journey. In the meantime, you go through levels, right? You're level 5, 10, 20, and you can certainly help people who are, you know, a couple of levels below you, or even if they're not below you in their level, but perhaps in that particular subject, you know, they're not very experienced. And so, and that's something that is also something to be aware of, right? We talked about a little bit, well, more than a little bit, about mentors and paying and watching out and things like that. But if we just mention, for example, when you're in a community, and that's the benefit, I think there's a huge benefit. You mentioned accountability not long ago. That's one big benefit of having in a community where you start building these relationships, right? You have some friendships, trading partners, buddies, accountability partner, people who you talk to every day, and you agree to, you know, share some information so you keep each other accountable. That is a huge thing, and that they don't need to be much better than you. They only need to want to be better. They only need to be, you know, just the desire and the discipline to improve every day, even if they're not good currently. The fact that you have to talk to that person, you know, that by the end of the day, at the end of the month or the week, and perhaps even at the end of the month as well, you know, it affects you psychologically in a way that you behave differently.
Yeah.
Right. And that's the thing. And that you can get, you don't have to go necessarily for a course, although, you know, it could help if you have a very good source, someone authentic. But that accountability benefit is already huge. And besides that, that is one-on-one accountability, right? Partner or buddy. But just being part of a community where you learn different things from different people, not all the day, all the time from the same person, but you just hang out with them and you learn from what they share, and you test it, see if it makes sense, if it helps your strategy, if it helps your win rate, if it avoids some losses, if it fits your strategy. And these things are free, right? The community, the 5ers community is free. The only thing it costs you is time, right? That's the only thing, but it doesn't cost you any money once you're inside.
Yeah. And I think, you know, your accountability buddy or your friend or whatever, it doesn't even have to be accountability. It could just be a friendship. Like the person that I'm talking about, I actually don't know who's the better trader. We're very different. He has a very low risk appetite and is very steady Eddie. I'm a little bit higher risk appetite and a little bit my ebbs and flows are a little bit wilder than his are. So for us, it's not even really so much about learning from each other. It just makes trading a lot more fun and a little bit less serious. It's not that we're not serious, but it's just we can share in the struggles. And, sometimes we just send each other stuff that I know he'd be interested in knowing about, or he knows I would be interested, and nobody else cares. So it's nice to have somebody that you can just kind of shoot the breeze with, so to speak. I think that's one of the number one underrated steps you can take, especially in this world where you can trust no one, it seems, right? But you can, there are good people out there, but I think I'm a good example. I'm not a liar. I mean, you don't have to believe me, but like I tell the truth. I showed my trades, wins and losses, mostly wins. And I'll tell you the reason why is because the videos where you show your losses, people don't watch as much. They want to see you win on your trades. So that's part of it. You go through the hassle of making a video where you lose, and people, I don't blame them, but they don't necessarily want to see that. So we are somewhat responsible for that. What's the point in making a video if nobody's going to watch it? But those type of channels, I'm not an entertainer, and my channel reflects that. I am very small. And then there's other people who are absolutely not good traders, but they're very entertaining. I have two actually that come straight to mind when I think about like, who would I absolutely not want to take trading advice from, but I would enjoy watching? I instantly know two. And, we have a responsibility for that. We like to watch big dramatic things, but that's not necessarily good for us. It's not good for our trading to watch somebody bragging about, a 5-digit day. So it's tricky, man. It's tricky out here.
Yes, it is. It is very tricky, but I think we hit on a very, very important, or we hit on a nerve, I would say, because if you see the messages we're getting, one here is about people talking about how they got not this message, but I've seen many here who they get scammed, or they lost some money thinking something, or they were how would I say, manipulated into thinking to one thing and it's not, or we're promised something they didn't get. I think this is I don't know, but I think it looks to me like in the audience people have some, if not a lot of experience with this, and that's why we have these engagements like this. You mentioned something very, very, very true, Deanna. You said that nobody wants to see, or people typically don't want to see a person, it doesn't have to be YouTube, but let's say YouTube, showing their losing trades. And I think, and you said we as the audience are in partly responsible for that. I totally agree with that. We see that in our stream. People want to be entertained. People want excitement. People want big dramatic things. They want to see big numbers, like P&Ls.
Yeah.
But that's not what they need. If they want to really be better traders, those things, I think they don't help you at all. Even they might be even toxic for you.
They absolutely are. But that's entertainment, right? The person that I'm thinking of, he's an absolute jerk. When he loses his mind. When he wins, he's so arrogant, so cocky. But he can be really fun to watch. I can only take so much of him because he's terrible. But the trading advice is no good. The behavior is abysmal. That is not what you want to see. But he has so many followers, so much engagement. It's unreal. I mean, he's making, I think it's like millions a month just in affiliates. I'm sure everybody knows who I'm talking about. I'm sure there's actually more than, there's many. Even my son is 15 and he's interested in trading. He has access to somebody who has approved it. Like, he can see my track record. And who does he want to watch? He sends me links of people on YouTube that I'm like, look, this dude is not a trader. I can promise you he is not a trader. Yes, he knows how to talk like a trader, but he is not a trader. And my son is just like, I think you're wrong, Mom. I think you're wrong. And I don't, you just have to be really careful what you consume, or understand that if you are consuming it, it's just trashy television. And if that's what you're into, that's fine. But it's very likely to impact what you think is normal. And that's the danger. That's the danger. Is you think it's normal to bring home on the regular, or people like, I saw a guy last night posted a very expensive menu. What should I eat tonight? And it was like this super expensive menu. Like, you just got to be really careful what you see, what you begin to think is normal and is acceptable. It's just, it's detrimental to us. It really is.
It is. I would say, without knowing who that person is, right? I don't watch. Actually, I need to confess, I don't watch anything on YouTube. For getting strategy advice from a long time already. But to the defense of that person, without knowing that person, right? I'm not going to, talk good of any, because I don't even know that person. But the thing is that it could be real, and that's the danger. It could be real. It's not obviously a false statement, or obviously false, because you can theoretically be very, very successful with trading. You can earn a lot of money. Yes, it is real. The only thing is, it's not very probable. The chances of someone doing that in very little time, or in a lot of extremes, the chances are very, very slim. Just to be profitable and doing that consistently is already very, chances, not many reach that level. And let alone doing that and then growing your way into stratosphere. It is possible, no doubt. But the danger of what we see, what the impression we get on YouTube, is that everyone is doing it. Everyone is successful. Everyone is getting all these big payouts. And these payouts, may be real, but it's certainly not everyone.
Yeah, you're absolutely right. And not only is it improbable, it is misleading most of the time. So this person that I'm thinking of in particular, and I've seen this type of thing come out more and more lately, he is allegedly profitable. However, his money that he's buying his supercars and his boats and his house are not from trading profits. He's even come out and admitted this now. He makes so much money, and it's not from trading. All he blogs about, videos about, is about trading. And he has supposedly made money as a trader. But that's not buying him a supercar. That's not, that's not it. He shared how much he made, and it was respectable. But it doesn't afford the lifestyle that he's showing and giving the impression that comes from trading. And that's the danger there. Is the other thing that has come out, I don't know if you all have been surprised about this, but traders are starting to share a lot of information, at least people I follow on Twitter, how much their expenses related to funding companies compares to how much they withdraw. I did not know that was a thing. I did not realize people really actually do that to that extent. All of those things, up until recently, I have never seen disclosed before. So they're not being dishonest. Actually, they did make that money, but the behind the scenes is very different than most people assumed. So
Yeah.
that's why it's so complex. I don't know.
Yeah. Well,
That's
in
funny.
any case, although we are our own source, in any case, here at the 5ers at our YouTube, we try to be as authentic, as raw, as open, as honest as possible with our ups and downs. And as you can see from our hosts, we're not flashing. Actually, we're actually a little bit against that flashing, doing things, flexing. In personally, it's not my style, but it's not it's not something we want to promote, because that's if you're good, you don't have to flex to show that you're good. Your work will tell us, right? If you're really really good at trading, just do your thing and we will see it. People will see it and see its value. That's my philosophy on flashing anything of material. All right, so before we're getting on the last half hour of our stream, I would like to remind everyone to uh, in the comment there is a link to our giveaway. We're going to be giving away every day for this week a 10K account, completely free. It's a giveaway. And on the last day, we'll give out giveaway 2, right? The only thing you have to do is click on that URL, that link in the comment, and next week we will have the draw when Jonathan is back from vacation. So what I would like to say as well is that in about 1 hour and 15 minutes, we will have a workshop, as we normally do, from Monday to Fridays in the Discord community. If you're not part of our Discord community yet, you're missing out. You're truly missing out. You get your access. It's completely free. Once you have an account with the 5ers, you get your access completely free in the dashboard. The lower left corner, there is a Discord link or icon, which will give you access to our community. Let's see, what else do we have for today? Are you watching? I know you're on the go. And we all know you explained to us how you revert to other to other sessions. In this case, Asian session, you go more passive trade management, which makes a lot of sense. Last week I talked about the benefits of passive. Actually, I trade passive management like 90% of the time. Of my trades, they end up in stop loss or take profit. I don't take break even. I do close some, but these are specific rules. The majority of my trades are governed by passive trade management. But Deanna, what are you looking today? Let's say, just give us a little bit of a glimpse in your mind. I'm sure you're on the go, so you have a schedule, you have limited time, you don't control your time completely because you're with kids probably and whatnot. What are you looking for in the market currently, and is it only on downtime? Is that what decides whether you're going to be trading or not, those moments where you're not active? Or do you have like certain time of the day reserved for trading even while you're on the run, or not on the run but on the go?
Well, after this, I have to jump off the stream, Victor, but I will say gold, I was looking at last week. I'm going to give gold a break because it really just has not, like I said, when the trading on gold is easy, it's not easy. I'm quote unquote easy, right? When the times are good on gold, the times are good. That has not been the case. So I'm just focusing on the S&P. I got my winner overnight. And so now I'm not even looking at the market. I'm just enjoying this beautiful summer day. And I am about to go about my day here in a couple of minutes. And that's it. And that is something that takes a lot of fortitude for me. I would rather trade all day long. But I got my winner last night during the Asian session, and I am done today. So I think, on the one hand, like I said, I'd rather be trading all day in a lot of ways. But on the other hand, I am really practicing, good trader management. That I got my win. That's all I need. And I'm on to the rest of my day. If I was going to be taking a trade, it would be on the S&P. I really like how the overnight gapped down and then had a huge reversal higher. There was another opportunity around the beginning of our stream, about I'd say an hour or so ago, where price came back down hard, found support, and then pushed higher. So there was an opportunity to get in there as well. If you're looking at the hourly time frame in particular, you can see how price looked like it was just absolutely crumbling, and then it found support and pushed higher. And even where price is right now, I wouldn't be totally against adding. But like I said, for me, I am done for the day. So I'm going to move on and enjoy my day. But I think that looks like a beautiful setup right there. And that would be what I would be doing if I was still trading. But I'm done. So I'm off to enjoy the rest of the day. I'll leave you to it. Thanks everyone in the chat too, by the way. I already said this, but just to reiterate, it makes it way more fun when everybody is engaged in the chat, and I love it. That's the whole reason I started a YouTube channel. That's the whole reason I go on Twitter. I love that side of social media. I don't have any supercars to flash. Kids, they cost just about as much as supercars, but I don't flash them around. So, but really, in all seriousness, having people in the chat coming back time and time again, engaging, that just makes it so much fun. And I really appreciate you all being here. So I will see you next time. Enjoy this.
Perfect.
I hope it's beautiful where you are. Get out, get some sunshine, and I will see you next time.
Thank you, Deanna. We truly appreciate your time. The fact that you took time to be with us while you are on the traveling. I wanted to say as well that we're gonna talk about this pattern after you log off, because there's a little thing I wanted to say to our audience about this. But you deserved your free time. Enjoy it. You got your profits. Now go enjoy your day, Deanna. Have a wonderful day.
Thanks, everyone. Take care.
All right, there you have it. We had a very engaging, very interesting conversation, more than we usually have, to be honest, on authenticity, about honesty, about the industry is filled with, I would say, good people in sense of mentors and sources, but also a lot of those who are just fluff and nothing much. All right, so and it is very difficult for you guys, I know, to find out where to get your information, to get your advice, how to become better. It is there's really it is and will stay for who knows how long, a difficult thing. What I wanted to say was we had a quasi, right? I don't trade the ES, but quasis and order blocks are universal. Doesn't matter what asset you use. It doesn't matter what time frame you use. It's just the way the market moves, regardless of the asset, regardless of market conditions. Obviously, as the market condition changes, the probabilities of these patterns work will differ, right? That's obvious. In a very impulsive move, you're not going to see a lot of reversals because the market is, very impulsive. That's obvious, right? So these any structure being created against that impulsive move will likely fail. But what I mean is I actually already, as Dr. Cole was talking, I mark a couple of things here, right? You have the, let's see, you have the downtrend, established downtrend, including that gap. We break the neckline on, this is on the hourly, break the neckline. And if you're up here, right, and you start looking, before the market did all these candles, and you had to choose where to get in, right? Where would you, looking back from this point to that point, where would you be looking for an entry, right? If you have been listening even a little bit, you would know that I would consider, I will tell you to consider to look for these structures, these order blocks that are created or left behind, where price is likely, doesn't have to happen, it's not going to happen all the time, but it's likely that price will react to them, and perhaps that's going to be the point of reversal for price to continue up. And that's exactly what happened in this case. It didn't actually touch the order block, but these are the nuances you have to know an asset for, right? It's not going to do it exactly the same way on every asset. There are assets that this will happen more often, where it doesn't actually touch it. So you'll have to adjust your strategy, your rules, your triggers a little bit different to accommodate the asset, right? But the way to do that is by collecting, gather data, collecting data on that particular asset that you have been, that you want, right? You want to trade, and then you apply the rules. All right. So true, Vinicius. Good conversation is all we need. Sometimes that is indeed the case. A lot of the times, I would say it is the case. All right, so let's come back to GU. We were talking about GU. Let me see where we got in terms of the time frame. We were talking about the order block on the daily time frame, right? The first retest, the second retest, both of these two, first one worked, and on the third one, although now it looks different, the third one looks even weaker. And I would not assume, but it looks like it's going to break it. If not in this candle, perhaps in the next one. All right, so we have the an order block which is no longer fresh, and it's not part of a quasi. What we do have is the following, right? This is the daily time frame, and we can already see that we have also in this asset, or in this time frame, both of them, we do have an established uptrend, right? Even if it's not very upward sloping very steeply, it's not steeply sloping, but it's still making higher highs and higher lows, breaking then the neckline. And if and when it comes back to one of these structures, you want to be looking for that short, right? So we do have a possible short from here. That's on the daily time frame. Of course, you will have to go to the lower time frames to get your entries, and you'll have to take into account the bigger picture, which is very bullish, right? So in order to set your targets, don't be too ambitious with that, because it is against the trend. What I would do is just target the next structure in the same time frame. If it's the daily that you're taking, in this case it is the daily, then you're looking for something below us, a daily, as a target. So that's GU. What else do we see? We do see I did talk about that order block, which when we get there, I would be looking for a long from this area, understanding that we do have a bullish quasi here as well, to trade from. Hope and Love, I like your name. Do you trade during red news release? Yes, I do. However, very cautiously, right? Very consciously as well, because it's quite dangerous if you don't know, if you haven't thought about it, haven't done it before, you don't know what's typical to happen with these red news releases, then you know it can be very dangerous. What I mean is that market can move very quickly, even gap 10, 20 pips in one direction. And if your stop loss is nearby, you can count that your stop loss is going to be executed at the exact time. Basically, it has the potential of creating a even bigger loss than you anticipated or you accepted in the first place. So you have to, do it on paper if necessary, then do it with micro lots, get an idea, get some numbers, some data, see how your strategy works on trading them around news, and then you start doing it slowly but surely. What I typically do is I take what I normally do is if my stop loss is what I have is I have measured from the assets that I trade what a certain specific news event typically, what is the range of its reaction, right? What is a big reaction in that asset? What is a more often less extreme result, right? And these numbers I use to decide whether I can leave my trade on, depending on how close my stop loss is to current price. If it's too close, it doesn't make sense because it can quickly take me out without really going anywhere yet. So that's one rule that I have. The other one is if I think that if I know, given the numbers that I have, that there is enough space, there's always the chance that I might get stopped out just because of volatility. I would then make a calculation or estimation if I need to lower my risk or not, right? Those are the things that I do. And a lot of the times, it's better to be safe than sorry, right? If you have a strategy and it makes its profit, outside of the news trading, and news trading is just one, incident in the whole month, you don't have to risk, your whole month's or, a part of your profit to just trade this. Just take your profit and trade another day. Let's be conservative, I would say, instead of aggressive in terms of risk. All right, let's see. We have currently we have the in red folder event PMI, manufacturing PMI, that just came out. It is, let's see the market's reaction. We are on GAU, so we can go to the lower time frames to see what's the reaction. This is the 1 minute, not a huge reaction. Let's look at EU. How is EU looking? We have an impulsive move, right? Big candles right before, big 1 minute candles right before the news. And the news came out and it hasn't really moved a lot, just continuing the trend that it had before. All right, let's continue with the breakdown of the GU pair. Let's see if there's any opportunity for us today or the coming days. Let's say, so we have the daily time frame. The order block isn't fresh, isn't part of an entry order block of a quasi. On the H4, we do have a quasi right here. Do we? Actually, we don't. That's not a quasi in my book. It looks like a quasi, but to me, it's not a valid one. Those are just my rules. So there isn't a neckline here. Let's see what else we do have. We will have to wait for this candle to close to see if we get a fresh order block, but that's too early to say. We still have 3 hours to go. On the H2, let's say the H2, we do have a quasi here, do we? Yes, we do. And the neckline is here, but you can see how this close invalidated that quasi. So there isn't anything to trade in that sense. It's basically broken. And when you can test this out, when a quasi on the hourlies, even if the H4 is still telling you that there could be a reversal if the H1 or the H2 breaks the quasi. The probabilities of it reversing diminish considerable, right? So that's one sign. So the fact that we close here on this time frame below this low tells me already that this move, even if it pops from here, it's not going to be a long-lived move. At least it can, but I've seen this many times. I've recorded it, and those are one of the signs that indicate that the chances are quite low, right? So either it'll have to start creating new structures here again, that you can say, okay, things have actually changed. It's not the quasi that it's a work, it's a structure that has been created. But that's not the case yet. We have it does look like an engulfing, but it's too early to say. It's only 50 minutes old, this candle, so we can't really say much about that. What else? So I don't see any opportunity on GU, to be fair. We did have before. I didn't trigger. That was on Thursday last week. Let me see if we have something on H4 as a fresh order block that we're going into. Actually, we do, right? But before I take that direction, I would want to know the daily ATR. Daily ATR. Let's look at the. All right, so we have 78. That's the range of today, and 90 is the average for today currently, 90.2. So I'm going to measure what that would mean, right? 90.2. There you go. So 33.58. So that's going to be my assumed range for today. So that could be something, actually, that's not bad at all. So we have a fresh order block here. I do see, we can all see that it is interacting with that daily order block. So you have to be a little bit cautious with it. Even though it's a third attempt and it is weaker than the first two attempts, it can still cause some kind of a reaction from the market, probably what we're seeing here. So and it's a daily, so those reaction, even if they are minor reaction, can still push price perhaps not as high as this, but something nearby, which could be enough to break this H4 order block. So it's a little bit tricky to trade, but still we can see if we can find an entry. Actually, we do have a little area here. If that area is still valid, as in, is it? Let me check. Is it valid? It is valid as in a fresh order block on the H2 and the H1. We actually have another one. Well, when we have these when we have these two different ones, it gets a little bit tricky. What I like to do is take the one that is the furthest away. So I have two options, right? So you have the H4, right? And this is enough in alignment, making this the area to wanting to be trading. Or you can use the H1 as well. But in this case, normally the H1 and H2, they indicate the same area. In this case, they're not, right? In that case, I want to be taking the one that's furthest away, okay? I'd rather not be triggered into the trade than having a lower probability. So taking the H1, let's mark that. And this needs to happen before in the next 3 hours. It needs to react to this. If not, then I wouldn't take it. It can still work out, but I wouldn't take it. All right, so let's see. Thank you for the good comments there, Vishal. All right, so we have this area. Let's go see on the lower time frames if we see anything. Right here we have welcome Arepa. Welcome for being here, Arepa. we have let's see, these are small candles. You have to watch out when they're very small, because if it's only visible on one particular price feed, I would rather not trade it. And in this case, that is the case. So I don't want to be trading that top. So on the 50-minute, there isn't anything I can use. And let's see on the 5-minute. Remember, guys, in the comment, there is a link of your chance to win a free account of the 5ers, 10K for you, free to have, if you are the lucky winner. We're going to be drawing 5 winners this week, 1 for each day that we stream, plus 2 on the last day. So don't let this chance pass you by. It's a wonderful chance to win an account, have an account that could start producing you some money if you apply yourself to it. I don't see anything on the lower time frames, to be fair. No, actually there is. Yes. All right. So I will consider this the neckline on the 5. It makes it sound like it's something discretionary, and it's not. Just simple rules, right? So that's the neckline. And let's see if it's a valid area or not. Right. So we go and see here. Can we spot what is the sweet spot on the 5-minute? That's this one. So this is what I'm going to be waiting for. Right? And that's not everything. We're going to be waiting for price to actually tell us that it's reversing from here, right? It needs to tell us that sellers are coming in after it gets to that order block. I don't think we will have the time to, I don't think it's going to reach it before we end this stream. Perhaps in our workshop, we can take a look at this. But this is a nice trade. It looks scary looking at the impulsive move it takes. And the fact that it's bouncing from that daily order block makes me be a little bit more cautious, because it could continue. But you will have to read price action, right? Don't get into this trade blindly. Look for the lower time frames, see if you have the quasi again, for example, or perhaps some order blocks or some indicators telling you divergence, deceleration, all those good stuff indicating a possible reversal. And you get in, put your stop above the head, and you can target something that makes sense within the structure, but also within the time of the day. If you expect for it to do the whole day's movement in the last 5-6 hours, that's not realistic. All right, so that's a GU. We finally got it. Let's look at some other pairs. Maybe I can check the chat. We still have about 5 minutes. Let's see if we have some good questions. Maybe we have some remarks out there. Let's see. Yes, indeed. It's always a nice talk with Dr. Cole. I believe her link is in the description. If not, I don't have, I should be in the description. Let's see. Checking the chat as we speak. Steven says, Victor, these days news doesn't respect it, or isn't it respected? I'm not sure I get what you mean, Chipeta. But if this applies for basically anything and everything, if you notice that your something that you used before is not as effective anymore, whether that be an indicator, whether that be the moment of the day, whether that be high impact news trading, or whatever it may be, that's a good moment to stop and reassess, right? Go back, I don't know, last 50 instances that you used that you could have used that item, that tool, that thing that you do, and see if it made sense to use it, right? did you get good results with it? Would you have gotten good results if you used it the last 50 times, 30 times, something like that? If you did, then this time maybe it's just, ebb and flow of the market. It's going to come back. But if you didn't, then maybe that's the time to start looking and considering, disregarding that tool altogether, or change it into something, that rule, maybe it can even be a rule, change it into something that, is more in sync with the current market condition. I like that humor. That's my kind of humor. I like that. All right. Arepa caught that. I suppose it's the move you caught, or was it a arepa that you caught? I'm not sure. Let me know. Vinicius says, yes, I will tell Jonathan. I'll tell Jonathan your suggestion, and he will respond to you when he comes back from vacation. Remember, everyone, this is your chance to win some account. This week, we're going to be giving a chance every week, every day of the week, to win an account. A 10K account to be won. Only thing you have to do is check the link in the comment. Very easy. Very, very easy. Follow the instructions, hit the link, follow the instructions, and you will have a chance at winning that account. It is possible to be yours soon, and the drawing will be next when Jonathan comes back next Monday. Let's see. All right, perfect. All right, so this is, I would like to invite everyone, again, if you're not part of our Discord, join us. We're going to be going live in 45 minutes. We're going to be talking, poking fun, trading. If there is an opportunity, I'll trade live in the front of the audience if the opportunity presents. And I hope to see you guys again tomorrow. Don't miss it. We are at the end of our stream. This is the best in the industry, the 5ers. Get your account and get funded. And if you don't know how to get funded, then keep watching and try to learn from people who are funded, people who are profitable already. Spend some time. I'll be happy to answer all your questions. If it's something that I know about, I will happily share my experience with you. That's it. Have a great day and see you guys tomorrow again. Bye-bye.